Challenges that business might face then, Guy?
Anna, the rocket launch has been pushed back. The European equity market open has not. It is time for the European opening trade. Let's take a look. I think you're going to see a fairly quiet session today. We're waiting for the debate, but let's see some numbers. The market is open. This is the picture you find yourselves with on the screens in front of you this morning. FTSE 100 in and out of positive negative territory. The futures indicated a negative open by circa 0.6%, so we'll see the downside maybe coming through as the market gets fully open. Stock 600 absolutely flat as a pancake. Similar story for the Spanish market as well. So we'll wait and see really what the catalyst is going to be a little later on in the day. Mark Cudmore certainly indicating that he feels it could be that US debate. How that translates into financial markets is going to be really interesting, but we do have the data as well to digest over the next few hours out of the States as well. So that's the story. Quiet-ish. The FTSE 100 not delivering the downside that maybe we anticipated. We're circa down 0.2% at the moment, Anna. What's below the surface?
Yeah, well, technology and the gains in the technology sector seem to be beneath the surface. And this is interesting because we were talking about Oracle read across, and perhaps there is a little bit of that in here. We have Capgemini up by 4.8% within that technology sector, and that is one of the biggest contributors to that positivity. And then technology is the best performing sector this morning. By some margin, it's up by 0.4%. We have only two other sectors in positive territory. To your point, Guy, pretty quiet session in terms of the futures expectations. They were pretty muted, weren't they, for European stocks? And most sectors are in negative territory. Autos and parts is the weakest performing sector. That is down by 0.4%. It's VW is in there. Some of the suppliers to the auto sector also looking a little weaker this morning. But that standout story to the upside around technology certainly seems worth lingering on for a moment. Yeah, the likes of Capgemini making gains, perhaps linked to what we heard out of Oracle.
It's the biggest points gain in terms of the Stock 600 this morning. Capgemini up by 4.1%, adding the most points to the upside. But ASML is also adding points to the upside as well. After that, it's a more eclectic mix in terms of the stock story that we're watching on the upside. On the downside, what is clear is that we're seeing some weakness in the drug sector more broadly. You were talking about AstraZeneca, but in terms of the overall downside, we're seeing Novo Nordisk down, Roche is down. You've also got Novartis under pressure as well. So you're certainly seeing some of that trade coming off. But I think it's more than that. I think it's a safety trade that we're seeing some weakness in as well today. So you've got the likes of Nestle under a little bit of pressure as well. Defensives have been outperforming cyclicals for a while now. Maybe a little bit of an unwind of that trade this morning. Oil is also lower. Shell is down. Total is down as well. We're keeping an eye on that trade. Is any of this related to China? I'm not sure. That oil trade, I think, is going to be certainly one we're going to watch out for. People are calling more downside in oil.
Yes, and it was a confusing read across from the China story into London. It was always going to be a little murky because the overall bigger picture is one of negativity around Chinese stocks, it would seem, and we've covered weakness in commodity prices for many sessions, it would seem. But this morning, looking at the GMM screen, we actually have some strength coming through in some of the commodity markets, certainly through the Asia session at least, even if iron ore is now dropping. Now we're into London time. But a mixed read across then from China and that commodity story into Europe. But we are seeing worsening trade around autos, which is interesting. That sector now down by 0.8%. Let's broaden the conversation a little, or at least dive into a different sector, financial services. Goldman Sachs CEO David Solomon has signalled a note of caution to investors. The bank's trading unit is on track to fall more than estimates, led by declines in its fixed income business, according to Solomon. Let's take a listen.
First, with respect to trading, I would say that with FICC equities, we had an extremely strong third quarter in 2023. And given this quarter, given what I'd say is a more challenging macro environment, particularly in the month of August, that business is trending down close to 10%, largely due to FICC.
Goldman Sachs' David Solomon speaking just yesterday, speaking on Monday, with a little bit of guidance as to where the business goes. Let's broaden the conversation. Nancy Curtin, Global CIO at Wealth and Alternative Manager Alti Tiedemann Global, is with us this morning. Nancy, nice to speak to you.
Nice to see you as well.
Maybe we'll take a dive into the financials shortly, and David Solomon, interesting there on what to expect from that kind of sector. But I want to start with the bigger picture with you, Nancy, because having read your notes this morning, I felt entirely more positive about the world.
Good.
So maybe we can dive into some of that detail. You say any negativity here, it's just a pullback. The bull market is still intact. You don't seem nervous about anything like a hard landing in the US. You say this is what a soft landing looks like. Give us the top line on the level of bullishness.
Well, first of all, look, the market's up already, 16, 18%, depending on which day you use, because it's been so incredibly volatile. But I think the important thing is a soft landing was all about slowing the economy so we could get inflation down. And that's what's been going on, right? We've come off the torrid pace of last year. Jobs have come in a bit. There are pockets of weakness in the U.S., manufacturing, low-end consumers, et cetera. But generally, we think the U.S. economy remains resilient. And where there are pockets of weakness, help is on the way, because the Fed is going to ease next week. And we think this is the beginning of further policy normalization to come.
Okay, so help is on the way in the shape of Federal Reserve interest rate cuts. But if things are as good as you say, or at least, just normalizing or cooling a little but not collapsing, then we're not going to get a lot of help in a hurry from the Fed, are we, I guess?
I think they're going to err on the side of caution here, because remember, as inflation has come down, real rates have gone up, so that would be passive tightening. In other words, the Fed would be tightening more if they didn't bring rates down. So we do think there's more than 25 basis points, maybe 25 next week, maybe 75 or so before the end of the year. It will be data dependent, so we're going to have to watch the jobs and the inflation number, as we've continued to do so far this year. But generally, we think mid to upper end consumers in the United States doing just fine. Investment spend in that second revision of the second quarter GDP was up 7%. There's a lot of good things to talk about in the U.S. economy, and the pockets of weakness are in the more interest rate sensitive parts of the economy, and that's where the help is coming. And by the way, it's not just the Fed. ECB likely cut rates on Thursday, right? Bank of Canada cut last week. So this is an advanced economy, global synchronized easing, and that helps as well.
If the Fed cuts 50, will that shake your confidence?
No, I don't think so. I think at the end of the day, they want to get ahead of what they see as weakness in the labor market, or at least slowing. It's not really collapsing, but it's definitely slowing, and they want to get ahead of that. So no, I don't think so. If they do 50, then they'll do 25 next month. So
you talked about volatility. If the volatility persists, should I take less risk?
No, you've got to ride through this. Volatility tends to increase in the months before a presidential election cycle. Going back 10 presidential election cycle, it always goes up in the couple of months before, and we have this kind of uncertainty economically, et cetera. We're also experiencing a market rotation. That brings volatility as well, because people are selling down tech and positioning other parts of the stock market. So, no, you've got to stay put. That's the point of long-term investing. You've got to see through the volatility and not miss those days. Look at what happened in the month of August. If you had missed the turn, you would have missed a pretty decent August. So, no, you've got to ride through it.
And you expect an inventory build ahead. Which sectors are we talking about?
Manufacturing.
This sounds like something that could help Europe as well.
Well, Europe's different. Little kettle of fish, and I think Draghi's trying to do something there. But manufacturing, look, inventory to sales ratio is at a 6-year low in the United States. We've had 5 months of manufacturing contraction. Rates are coming down. Who wants to hold inventory in a high interest rate environment, right? But if growth continues, we think inventory build will be a positive contribution to GDP. And so we expect that to pick up as the Fed brings rates down. It makes the cost of financing a bit easier for companies. Yeah. Absolutely.
You mentioned Draghi. Let's have a moment to think about the European story, because yes, we're getting the benefit of monetary policy easing from the ECB, but there are all these structural issues and competitive issues that we've been talking about for 20 years, it would seem. And back in 2003, there was a similar report talking about a lack of competitiveness in Europe and all the things that need to be done. From your perspective, Nancy, does the fact that Draghi is saying it, such a serious character as Draghi is saying it, does that make any difference for what you expect to see with your international perspective here in Europe?
I hope so. Europe needs a Draghi solution, and he definitely has come out with a pretty strong clarion call here, and I'm very hopeful that van der Leyen listens.
What about 50 basis points of cuts from the ECB? Would that help?
Look, European growth is pretty moribund at the moment. But
Does Europe need rate cuts more than the US?
I just think the ECB will be cautious. I think we'll see 25 basis points.
Why will it be cautious? Because it's worried about inflation still?
Because it just is. Because it's just cautious. I think the better solution is what Draghi talks about.
That's super long term.
That is super long term, but that's what the markets need to see. They need to see Europe beginning to invest strategically to think about economic growth in the future, and that is missing.
Yeah, there are just lots of examples of places that Europe agrees action needs to be taken, like banking union, for example. And even with agreement that something needs to be done, you can't actually get to a deal.
We need a
crisis. They can't agree on the detail.
We probably need a crisis. But I think Draghi's report was a real clarion call, to the EU government that they need to do something. Otherwise, by the way, the United States will just continue to invest strategically. This is the new mantra for governments ahead: strategic industrial policies, thinking about national competitiveness.
Can I invest in that in the near term? That feels very kind of long term and very speculative.
No, but take a look at what the Inflation Reduction Act has done and the CHIPS Act has done in the States.
Why do I put money to work in Europe right now? What's the case? Draghi's painting a pretty bleak picture right now.
I think there will be a recovery in Europe, and Europe at the top down never looks terribly good. Bottom up, they have some very, very good companies, right? So if we get this advanced economy easing, many global companies will benefit, and stocks are cheaper in Europe. I'm not banging the table for Europe. We're overweight the United States at the moment, so I want to be clear about that. We still think the U.S. is the most interesting stock market, albeit more expensive.
And we focused a little bit on Apple and its offering in the AI arena. What does your thinking look like around AI and the extent to which you want exposure to technology because of AI in the technology space, or maybe AI starts to deliver in other sectors as well? How do you start to play that?
Well, I think, first of all, AI is early innings, right? So I think the market is worried about these tech companies and all that spending. That will come, but it will come in time and will weigh on sentiment. But AI is an S-curve, right? So right now we're going to move from all this digital infrastructure to AI at the edge. That's in our phone. That's Apple 16, probably 17 and beyond. But I didn't see so many enhancements yesterday in the Apple news conference. It wasn't exactly Siri on steroids. But yeah, I think there is more to come there. But what really will happen is when AI takes hold in parts of the economy, sectors like industrials and financials and healthcare, that's when, and that is not priced in. And that's what we think is a really powerful long-term story.
Great to see you, Nancy. Thanks for stopping by to see us. We really appreciate it. Nancy Curtin, Global CIO at Wealth and Alternatives Manager, Aldi Tiedemann Global. Thank you very much indeed. Morgan Stanley, by the way, sees the euro tanking 7% back to parity. ECB may be escalating its rate-cutting cycle. Let's get back to the single stocks. Let's figure out what's happening in Europe this morning. This is what the Core 6 looks like right now. As you can see, a little bit of green on the screen. LVMH, Ferrari, both rising. ASML up by 0.8%, doing some lifting this morning. But it's interesting, you are seeing healthcare and some of the defensive stocks, which have been outperformers recently, struggling a little bit this morning. So Nestle, flat this morning. Let's talk about some of the other single stocks. The healthcare sector is in focus. And hearing aids. Do I need to worry about the fact that maybe these new Apple AirPods can do that job for me, Joe Easton?
Yeah, so that's exactly where we're going first, Guy. It is hearing aids, an unexpected area of the market today. These stocks getting hit following news that Apple is potentially going to be introducing a hearing aid function in the latest version of the AirPods. That's what they've said in their release last night as part of that big event. They do say that they haven't yet got FDA approval for this update to the product, but it does look like a threat to these stocks. So we are seeing likes of Amplifon, Demont, Sonova, GN Store, a lot of these listed over in Denmark and also Copenhagen and Stockholm, other cities around Scandinavia as well. So all of those getting hit on that news as well. Then staying in healthcare, we've got AstraZeneca. We mentioned this one in stocks to watch, and it is a pretty big move, down 5% for Astra on news that one of their key lung cancer drugs didn't quite live up to analyst expectations in the small cell lung cancer. We saw their joint venture partner actually falling around 9% in Asia as well overnight. So pretty negative news on that one. One of the worst performers on the FTSE 100 today, down 5% for Astra. Then we've got a couple of deals movers as well to bring you. One of them here in the UK, a massive takeover for Sentiment. It's more than £2 billion. This is the gold miner. The gold prices at around $2,500 on the ounce has helped that company, and it's up 23% today. A takeover from a South African company coming in for the UK firm. So that is a big mover today. And we've also brought up Rovi, looking to sell some assets according to some Spanish press today, but that one not getting too much of a boost. It is actually declining 1.5%, also in pharmaceutical. Then the software stocks. Now we have got some moves in these, a bit of a read across from Oracle. So we're looking at SAP, Sage, Dassault, and also very helpfully, one of our viewers has just messaged in and noted that Capgem does have a broker upgrade. I've just confirmed that with my sources. Bank of America upgrading that one, Capgemini. So that one up 5%. Also a read across from Oracle as well. Finally, we're going to do a couple of morning calls. ASOS, we mentioned earlier, and this one hit as Barclays goes underweight on this stock. Now, they've got a 290 price target. Look at the way the stock trades now at 416. So a lot of downside. The competitive threat of Shein is what they're saying is the risk for that one. And finally, AB InBev, this one going the other way. Exane, BNP Paribas upgrades this following a rebound in Budweiser sales, according to Exane. That's the world's biggest brewer, and it's up 1.8% over in Belgium today.
Joe, thank you very much. Joe Easton from our equities team. Joe was mentioning pressure on AstraZeneca and the share price there, lung cancer trial with Daiichi not going so well, or as well as some had expected. We should say we're going to be speaking to Pascal Soriot. Francine will bring you that interview in the Pulse. That's an exclusive conversation here at Bloomberg, coming up in the next hour of programming, just less than an hour from now. So good to get his perspective on that and a host of other things. Lots of news flow surrounding the business in China, of course, recently. And thinking of what's happening in China, we have Huawei debuting their tri-fold phone. We've had a cast of management from Huawei speaking this during this launch. And so this continues. We had the dancers earlier, now we have the speeches. They have unveiled this trifold phone. Now you can see it on your screens. We will continue to watch how that develops. It looks expensive if some of the pricing details we're seeing are correct. But anyway, maybe not everybody will be going for that one.
Trying to work out why, how, why do you need a trifold phone?
It gives you something that's pocket-sized but also bigger.
But opens out into some sort of, I don't know. Anyway, we'll continue to pay attention to what is happening here. Clearly a response as well to what we're seeing from Apple. Talking about tech, we are going to be talking about what is happening on the legal side. The EU's top courts are set to deliver 2 key rulings today. Big tech rulings that we're watching out for. Implications for Apple in the tax case. We're watching the Google antitrust decision as well. All of that on deck. We'll get some analysis on what we should be watching for and the implications from it. That's coming up on the show a little bit later. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Top of mind for us to make sure that the market stays competitive when everything gets fueled by artificial intelligence. It's going to change the marketplace. It's really important that now when we have technology, which is not just a new technology, it's basically a new world that we're looking into, that we make sure that it's a competitive new world.
Margaret Vestager, the EU's competition commissioner, outgoing competition commissioner, speaking back in April, talking about AI. Today, in some ways, her legacy is on trial. The EU's top court is set to deliver final rulings on two cases that could have major implications for big tech in Europe. Judges will decide if Apple owes a €30 billion tax bill to Ireland, while Google will find out if it abused its market power by giving prominence to its own price comparison results in online shopping searches. Joining us now, Fiona Scott-Morton, Professor of Economics at the Yale School of Management and Bruegel Senior Fellow. Fiona was previously Chief Economist at the Antitrust Division of the US Department of Justice, and last year she was named to the EU's Director General for Competition before withdrawing from consideration. I think she's qualified to talk about this subject. Let's put it that way. Fiona, great to speak with you this morning. Thank you very much indeed for your time. How should we think about these two cases that are coming up? In some ways, so different, but in some ways, they are joined in as much as they represent Europe's efforts to regulate big tech and the way that its economic effect is spread out throughout the economy.
Yeah, thank you for having me. I think that the Google shopping case is in a way the easier one to understand because it's just so old. This case was opened back in 2010 or thereabouts, so it's 14, 15 years old. And what that tells you is it's a bit irrelevant. I mean, it tells you that antitrust is so slow that what you need is something like the Digital Markets Act. And indeed, the EU decided antitrust was too slow, proposed the Digital Markets Act, adopted it, and it's enforced by now. And all of that before we get the final appeal. So that tells you that there's been a paradigm shift. The Irish case, the state aid case, is a little bit different because there you're thinking about analogizing, can a country pay a company to come build a factory there? Is that the same thing as the country paying the company to put their headquarters there by lowering its taxes? So if this doesn't work for Vestager, then what that just means is that the EU has to pass laws if it wants to control this kind of behavior.
Good morning to you, Fiona. So if we take the Google case in the first instance, as you set out there, going back to 2010, the fact that we have the Digital Markets Act now, Fiona, does that tell us that we won't see any of these big legal test cases against big tech anymore? Will the conflict, if that's not too strong a word, between Europe and big tech in the States, will that take a different form from here?
It will take a different form. I don't think we're going to see no more of these cases, but the idea of regulation is that everyone knows what the rules are ex ante, and so they can moderate their behavior and the regulator can help them as things go along, and you don't get as many of the antitrust court cases as you did before.
In terms of how should we think about what is also happening in the United States at the same time? I'm starting to see the DOJ taking significant action, and I'm wondering whether or not it reinforces the European cases that we're watching go through and the European efforts that are being made. Is the United States behind Europe? Is Europe proving itself to be correct in the way that it has approached some of these cases by just watching what is happening stateside?
I think that's a very good point. I think we are seeing the EU be proved right because the United States is bringing a lot of these cases a decade later and getting the same answer, which is a good clue that there was a good theory of harm to begin with. So we have the first of those results, the Google search result in the United States, confirming that indeed Google monopolized and engaged in illegal behavior, even under a different legal standard. But you can see the fundamental behavior being the same and being not competitive.
That's interesting. So the US following, and that's your view on the outcome. What about what Europe does from here, Fiona, post Draghi? Now we've heard from Draghi and what he has to say about competitiveness, and he, one of many, but a very important voice to point out a lack of tech and innovation in Europe. Was there anything new from Draghi that crosses into your universe that makes you think we'll see a different regulatory lens here in Europe?
He was very keen on enforcing the DMA. He says that in his report. He does have a lot to say about using European aid rather than at the national level, at the EU level, to try to achieve the goals of the EU if it's things like more technology, more innovation, more skills training. So I think it's a little bit subtle. It's not a dramatic, let's, blow up big tech or have more big tech, yeah. but more a subtle message.
But the message was also Europe has too much red tape. And how should I think about that, given what has gone before? Are these court cases an example of too much red tape? Is Europe engaging in overreach? I heard what you said earlier about what is happening in the United States now, but is the red tape too tight in Europe?
Imagine if you founded your business in Massachusetts and in order to sell in Connecticut, you had to go through the whole founding process again with establishing yourself and what your product was and a whole bunch of regulatory effort. That would be a hassle. Every time you added a new state, you had to do that. That's what Europe is like. So yes, there is too much red tape if you want to access the single market. It's a big problem.
And what about what this means for Commissioner Vestager, Fiona? I mean, as somebody who's watched everything that's happening on competition for a number of years, she's not going to be in this role for much longer.
Yes, I mean, I think it would obviously be lovely for her personally if she won these things. I think the state aid taxes case is really a bit philosophical. I don't think it's about the exercise of normal competition law in Europe. It's asking the civil society, which way are we going to control this behavior? The Google shopping case is important. If the court turns down Google shopping, then it's just even more justification for having the Digital Markets Act, because you can't do these things through the courts.
Thanks so much, Fiona. Good to speak to you. Fiona Scott-Morton, Professor of Economics at Yale School of Management. We appreciate your time. Coming up, insights from one of the largest French firms in private markets. We hear from the Executive President of Ardian live at the EPEM conference that's taking place in Paris. Lots to discuss there with Chrissy. This is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
In London, 30 minutes into the equity market trading session. Quiet session. We're waiting, I think, for some catalysts to come through from the United States in the form of CPI and, of course, tonight's debate. One thing that we were expecting this hour, but is now going to be happening in a few hours' time, is the launch of the Polaris mission from SpaceX. You can see that the rocket is still firmly anchored to planet Earth and will be proceeding, we think, in circa, 2 hours from now. So basically what's happening in New York right now is that Manus Cranny and Danny Berger are basically studying astrophysics and trying to gen up on exactly what this launch is going to deliver, because it's now going to be in their hour.
Yes.
A little bit later.
You know, all those times you say to yourself, it's okay, it's not rocket science, and then it is.
It is
rocket science.
Yeah.
So so we feel we are with them in spirit. It is an important mission, though, isn't it? Because of it being the furthest that humans have flown into space since the Apollo astronauts reached the moon, which certainly gives it some impact.
They're going to have a spacewalk as well.
And there's the spacewalk.
Which I'm quite excited about.
Commercially funded spacewalk, so that'll be the first one.
And the space suits look very cool. In terms of some news we're just getting through, the EU is proposing that it's going to lower tariffs on Teslas and other EVs from China. The Tesla tariff will now drop to 8% from 9%. So it'll be interesting to see what the auto sector, maybe that's the reason why we're seeing some weakness that Anna was flagging a little bit earlier on. Let's take you from space to Paris. I'm not sure how you make that connection, but we're going to do it right now because Kriti Gupta, of course, is in Paris for EPEM. Kriti, take it away.
Well, I'll make the connection here because I don't understand rocket science. Sometimes private equity, private capital markets feels like rocket science to me. Luckily, I have the perfect guest to talk about it. I'm joined now by Mark Benedetti, the executive president over at Ardian. They oversee about $170 billion of assets under management. Let's just dive right into it. This is a French firm. This is perfect that we're here in Paris talking about it at a crucial time for French politics, but also for French investment as well. Mark, I want to start there. We'll dive into the broader stuff in a moment.
Sure.
You're visiting us from the States. You oversee a French firm. How are you thinking about the investment prospects of France right now?
Look, you know, our firm was born here in Paris. We've been local here for a long time. We very much believe in the European story. And if you look at our roots, you know, France, Germany, Italy have been areas we've been investing from the start of Ardian, so 25 years ago. It's done very well over the last 25 years. It will continue to do well over the next 25 years. But you really have to be multi-local. So we have local people in the offices that have been there for years and years, and that helps us develop those relationships with entrepreneurs.
What is the European story?
Look, I think that if you look at the kind of companies that we invest in, we are specialists at taking sometimes French champions and making them European champions, or European champions and making them worldwide champions. You know, we just invested in a company called Magimix, which you probably saw here in France, which is a worldwide renowned brand, and we're helping them grow to the next level.
When we talk, though, about private markets, kind of filling the gap in some ways where fiscal budgets are constrained, where you have like Mario Draghi, for example, calling for just shy of 1 billion euros in investment. How believable is that? Is there really that enthusiasm for private capital, or from private players, I should say, when it feels like there's a lot of hesitation from everyone else?
I think that is a big tailwind, actually, for certain parts of private capital. notably our infrastructure business. So we are the biggest European infrastructure investor. And we've been investing in Europe for years and years. And, you know, they need that capital investment to help the infrastructure grow, to flourish, to blossom.
Yeah.
They can't do it alone. They need to do it in partnership with private capital. But you have to pick the right spots because these are very highly regulated assets. So you want to be in an area, in a country, in a city where you know the regulation is airtight and you have those relationships as well.
Well, you led me right to where I wanted to go, which is that's also a big inhibitor for Europe broadly, to the point that it has dissuaded a lot of your colleagues in the space for years. And I'm curious, what needs to lighten there?
Look, I think that if you think about what needs to lighten, first of all, you have to be local. I think it's very hard to invest throughout Europe if you're doing it from a distance.
Yeah.
Or if you're doing it from one office trying to cover all the different geographies, because they're extremely different. The different drivers in Italy versus France versus Germany are all completely different. So I think, first of all, you have to be local and you have to spend the time to get to know the assets, get to know the market, get to know the regulators, and then you start to understand what's at risk and what's at play.
Well, it's handy that you're coming here from the States, because I'm curious about deal flow, as we all are, and when these kind of capital markets are going to open up. There's $3 trillion wrapped up in private capital markets right now, to the disdain of hedge funds, endowments, a lot of players who are saying, when are we going to get our returns? Do you have a timeline on that?
Yeah, so it's a great question. I think if you look back on the last 3 years and we look at the capital calls versus distributions, we're still calling more money than we're sending back to the investors, okay, globally for the private equity buyout industry.
Yeah.
It was 170% in 2021. It is 110% now. So it's getting better. So the logjam is loosening up a little bit. But to your point, there's still a lot of assets trapped there. What gives me a little bit of hope is a few things. First, the assets are performing well. So in our portfolio, we had double-digit EBITDA growth over the last 12 months. And we see that across a lot of established buyout assets. So that's a big plus. Secondly, the dry powder that was raised to invest in these assets is getting older.
Yeah.
These funds have raised money and they have to put it to work. 25% of the dry powder in private markets in buyout is more than 4 years old. You know, typically there's a 5-year investment period.
Yeah.
So groups have to start putting money to work. So that bid-ask spread should start to narrow. And I think it's going to be a very active Q4 and Q1.
So Apollo Scott Kleinman called this dynamic the pig moving through the python. A gruesome image, but I think an accurate one. And it feels like so much of that hinges on just when the IPO market is going to see even more activity. And I'm curious if the interest rate picture spurs that kind of excitement, perhaps, in the public markets.
Yeah, I think that's part of it. I think the interest rate, discussions, we'll see where it goes. People are calling for different rate cuts over the next 12 months. If it's 25 basis points down, then 100 basis points later, we'll see. I do think that people want a sustained couple of months of at least lower volatility in the public markets before they IPO their assets.
Yeah.
But we're still seeing the IPO market is somewhat frozen for the EV 5 to 10 billion companies. For the larger companies, you can see a few have reopened and they're doing well, but it's still a little bit tight there in the middle.
What is the benefit of being public in this environment? Given the valuations, given some of the jitters that you're talking about, what's the point?
Well, I think that's a great point. So we get the question a lot saying, will private markets one day overtake public markets?
Yeah.
I don't think that's the case. You need a very big active public market out there, really for the largest companies. So if you look at the mega cap companies, there's no private equity solution for these multi-billion dollar, even approaching $1 trillion EV assets. So if you think about that, you always need the public markets to fill that role. And I think that's going to have to continue. But I don't think that middle market is where private equity has been playing a role that's been more important than years past.
So you say that private markets may not be able to overtake the public ones. Could it in Europe, though?
No, but I do think across different people's allocations, they're starting to say, hey, you know what? Private equity has done very well for me. It's outperformed over 5 years, 10 years, 15 years, 20 years, at least 500 basis points or more. So, and if you look at the volatility in private markets compared to the public markets, it's much less. It's almost a third of the volatility in the private markets that we see compared to public markets.
Yeah.
So we have groups across Europe saying, hey, you know what? Maybe I should be more than 10 or 15% to private markets. I should be larger than that.
Yeah.
And that's why we see the whole industry going from about 13 trillion of AUM today upwards of 20 to 25 trillion by 2030. So massive growth.
It is massive growth, and there's a lot of optimism in these private markets. But in the public markets, you say when there's so much optimism, that's when you know you're in a bubble, or that's when you know a crash is coming. Walk us through this idea of when the party stops for private capital markets. And I specify that specifically because it feels like so much of the outperformance post-COVID and in the last couple of years has been driven by this search for yield. But if you're getting that yield in the bond market or in emerging market currencies or even in the stock market, arguably, with this AI boom, why go to private?
It's a great question. I think, look, there's definitely a pickup in yield right now in fixed income that you're getting that is quite attractive.
Yeah.
I do think that you get a very strong return in private markets and with a longer duration, which is what a lot of these long-term investors are looking for. But to your point, I think the easy money that was made in private markets and in the rest of the financial markets from just the low interest rate environment, that's gone. And that's not coming back for 3 years or 5 years or 10 years. So it's really back to basics. It's investing in companies that have good growth stories, helping them grow, operational strength, great management teams. And it's going to be, private equity 101, which is going to rule the day for the next 10 years.
One of the hindrances of that argument, though, is, and you hit this earlier, the regulatory scrutiny. And specifically, I want to zero in on a conversation in the UK at the moment when it comes to taxation around carried interest. What are your conversations looking like on this? How much of that is a headwind for investment in the UK and arguably the rest of Europe?
Yeah, look, I would say that at least for us, for Ardian, we're in 19 offices around the world. Taxation ebbs and flows. Whether it's the U.S., we saw it in France years ago when Hollande was elected. There was a lot of questions there about what was going to happen. And if you're making your decision based on taxation for a given geography, you're not taking a long-term view. So, yes, it will ebb and flow. You might have some more people or less people in private markets in those geographies, but you got to take a view of 5 years to 10 years plus for these assets. And if you're making a decision based on taxation, you're probably making the wrong one.
The budget in the UK comes up, I believe, the end of October. What do you need to hear from Keir Starmer and arguably Emmanuel Macron or Mario Draghi or pick your European politician? What do you need to hear to say this feels like a better regulatory environment for me?
I think that's a great point. I think for us, what we look for is stability. Okay, whether,
Some would argue the UK is the island of stability right now.
Right, and I would say that once people have a sense that they know the rules of engagement that are impacting the regulation across private markets, public markets, good or bad, once you know the playbook, then you can actually implement what you want to do. Until that time, you're going to say, you know what, let's wait. If I was about to buy this asset or do an add-on acquisition in the UK, or I want to expand in the UK, if things are too much in flux, you're going to wait. And, this uncertainty, that's the killer for private investment. So I think that you need some stability. You need some clarity on exactly what the rules are. And then people start to roll out their plans for investment.
All right. Mark Benedetti, we'll leave the conversation there. We thank you so much. He's the executive president over at Ardian, joining us from the States, of course, overseeing about $170 billion in assets under management. This is an important conversation in terms of attracting that capital to Europe. They want the investment, but the regulation may just be getting in the way.
Chrissy, thank you very much. Chrissy Gupta, of course, from the EPAM conference in Paris. Really interesting views there on the UK, on stability, also the role of public and private markets for large and small businesses. Interesting conversation. And we thank Chrissy for bringing that to us. 8:42 here in London. We don't have the SpaceX liftoff taking place right now, as we had anticipated that it would. It's been pushed back, so that will be coming later. In the meantime, we have even more time to talk about some of the interesting developments in other fields over the past 24 hours. Coming up, former ECB President Mario Draghi is calling for as much as 800 billion euros of new spending by the European Union. Where's that going to come from? We will talk about his report on competitiveness next. This is Bloomberg.
recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome back to the opening trade. We have news breaking from, in connection with Apple and its legal fight. We were talking about this with a guest earlier who was getting us prepared for this news. Apple loses an EU top court fight over a €13 billion Irish tax bill. The EU's top court has said that Apple was given illegal state aid. This ruling then seen as a boost to the EU's crackdown on tax deals for big firms. And this goes back to the plans that were, or the offer that was made to Apple by Ireland around its tax rates if it were to position certain operations within Ireland. So we have some conclusions there. Let's bring in to the conversation Oliver Crook, who's in Berlin for us, of course, tracking all of these EU stories for us. And this one is front and centre today, just getting some news lines about it. Ollie, we were talking to a guest earlier who was preparing us, saying that this was going to take to attest as to whether state aid rules were going to be enough here or whether Europe was going to require other legislation. What do you make of this news?
Yeah, so listen, I mean, this is something that has been rumbling on since 2016. It was when the fines were originally levied by the European Commission. And again, this is absolutely huge. This is 13 billion euros worth of fines and has to do with that tax bill over in Ireland. This was then knocked down by the European General Court back in 2020, and this was supposed to be the final ruling. So this obviously will have massive implications, obviously for Apple, which is now facing a very, very large tax bill in Ireland. This will have some implications for Ireland as well, which has managed to bring so many of these companies into its jurisdiction because of these low sort of rates. I mean, it also has, obviously big ramifications for the EU as the sort of regulator for all of these companies across Europe. And obviously also as the legacy, and we shouldn't forget, of Margaret Vestager, who has been 2 terms now in the European Commission, the Commissioner for Competition, one of the most powerful rules here in Europe. She is almost done with her term in the next couple of weeks. So this is really kind of like one of the last hurrahs and really a significant one in her sort of quest to be the big regulator for technology across the world. What I also think is interesting is we also get this around the time of the Draghi report, right? And the old adage is America innovates, Europe regulates, and that is certainly what we are seeing here on that side. We're also waiting for that ruling on Google, which is more of a sort of antitrust about favoring its own shopping services online. That's also been going on for 14 years. So there's a lot happening out of Brussels today.
Ollie, the other piece of news that we've had out within the last few minutes is that we are going to see the tariffs that are being applied to Tesla, effectively Tesla exporting out of China into Europe, being reduced. Why?
Yeah, so listen, this is an ongoing investigation. They're getting more and more data as the investigation by the EU Commission goes on. It's been going on for, almost a year now, and they sort of put these proposals forward. They went to these firms in China who produce there and tried to assess how much subsidy and sort of incentives they get from the Chinese government, and depending on that, they're adjusting the rate. So initially, Tesla was looking at something like 20%. I'm seeing just now that the Google news is crossing now that Google is also losing the EU court fight and is for 2.4 billion euro fine. Again, we were talking about this earlier. This is the antitrust case that the EU is taking against Google. So these are two really major wins for Margarita Vestager here that are the final rulings at the European Court of Justice, all of which have been appealed, many of them for almost more than a decade. We're talking about more than 15 billion euros worth of payments that now will be required from Apple and Google that just crossed here over the last couple of minutes.
Yes, and just to reiterate then, getting that red headline across the Bloomberg terminal then, Ollie, on Google. Google loses the EU fight to overturn $2.4 billion worth of fine. So it is a smaller fine there, but EU judges saying that Google abused dominance in this shopping case. So that's two pieces of news going Europe's way. But we heard from Draghi yesterday, he doesn't want Europe to be, he wasn't passing judgment on legal stories, but he doesn't want the European tech story to be all about legal challenge. He wants there to be more innovation in Europe, and he wants there to be a more competitive Europe. I suppose these stories are linked in that sense.
Yeah, certainly. I doubt he has in mind many of the sort of massive behemoths that exist over in the United States, I think that also what's interesting is that particularly on this Google case, this is before the Digital Markets Act, which was passed very recently, which is supposed to deal with this sort of behavior. So it's interesting now that this is something that predates that, and still these fines are going through. Yeah, but the situation and the conversation that Mario Draghi is trying to put forward is basically dealing with the fact that Europe has no company like Apple, like Google, like NVIDIA, basically zero. He says that in the last 50 years, there has not been a single company that has been founded in Europe that has a market cap that exceeds 100 billion euros, whereas in the United States, you have 6 that exceed now $1 trillion. What he is saying is that basically Europe has failed in terms of creating companies to capitalize on the internet and the digital age, and that has led to massive productivity shortages and a huge gap between what you see in Europe, what you see in the United States. And what Draghi is saying is that this basically could amount to the loss of European competitiveness. It already doesn't exist, but if it does not, if it goes untreated, this will mean that basically Europe will become economically irrelevant in the decades to come. And that sounds sort of stark, and he's a very sort of mild-mannered guy, as we know, and we don't really want alarmists at the head of the ECB, which is perhaps why his messaging comes out so tenderly. But he's talking about existential threats to the European economy if they cannot get this together. He talks about in the United States, the sort of average wages, the disposable incomes have grown more than twice what they have in Europe over the last 25 years. And these are the things that basically, as Europe, as it is right now, cannot address and will not address, and is a massive problem that really threatens the future of Europe as a political entity, but B, obviously as an economy.
Absolutely. Feels like we've heard some of this before, but the solutions remain the same. And I think Europe's going to struggle to deliver those solutions. Ollie, thank you very much indeed for the update. 2 key court rulings within the last few minutes. We will continue to obviously monitor the fallout from both of them as we work our way throughout the morning and head towards the US Open. One thing that we will also be watching as we head towards the US Open is the second window for the SpaceX launch. We were anticipating it this hour. It now looks as if it's going to happen in a couple of hours' time. Manus Cranny and Danny Berger will be walking you through that. But let's talk about what we've seen this morning and the significance of this launch. It is becoming quite common to see SpaceX launches, but this one feels a little bit different. Kate Duffy joins us now, UK Airlines and Space reporter. Nice to see you this morning.
Good to see you.
Do we know why it was deferred, delayed?
Yes, so SpaceX has said it's literally just because of unfavourable weather conditions.
Right.
So they can't launch because of the bad weather. So Mother Nature, unfortunately, isn't on their side this hour. But they have got 2 other windows today, one being in the next 2 hours and then 2 hours after that. And then if that doesn't go ahead, then hopefully then tomorrow. But this mission, we thought it would go ahead maybe 2 weeks ago, a couple of weeks ago. But then because of a helium leak, that got postponed. And then it's just been because of bad weather conditions. And as you said, this is just so common in the space industry. This isn't a SpaceX issue. This is what a lot of rocket companies face when they try and launch rockets. They want it to be safe. They've got 4 people on board. There's even more safety precautions going in there, a lot on their shoulders. So yeah, they're just waiting for the right weather, and hopefully they will launch. Yeah.
So we could see it launch later this morning, European time. Talk us through the significance of this, because it's significant because what they're going to be doing once they get to space, and also how far they'll be going.
Yeah, so it's the first commercial spacewalk that we're going to see. So no other private company has done this in space so far. So SpaceX will be the first. And it'll also be the furthest that people have gone into space since the Apollo mission reached the moon. And it'll also be the furthest that women have ever travelled from Earth. So there's a lot hanging on this launch, and it will be so exciting to see how it goes. And as you said, there is the spacewalk as well, which sometimes seems a little bit uneventful.
Walk is a strange word to attach to it, really, isn't it? It's a sort of, space dangle.
Yeah, kind of, yeah. And we're not really entirely sure what the kind of the purpose is of this particular spacewalk. But what it will do is sort of add to SpaceX's portfolio, and it will, they have a lot of things going on in their business right now with Starlink, and that's something else that they'll be testing in the mission too, Starlink in space. And they'll also be conducting lots of scientific experiments too with the human body and reaction on Earth and in space. So yeah, it'll be really exciting once it goes ahead.
This is a precursor, though, to other things. The reason maybe they are testing this is because of the suits. They talk about needing lots of them in the future because they're going to be doing lots of this kind of thing, starting on the moon and ultimately going further than that.
Yeah, so the whole aim is to sort of create this base on Moon and Mars, and it seems like a very future, distant issue, but it is something that SpaceX wants to start creating right now, and as you say, like scale up these white, sleek spacesuits.
Cool.
They are very cool, yeah, and there's lots of images on them on social media
if
at the
I'm going
moment.
to Mars, I'd like to look cool and probably be cool because it might be a bit warm.
Exactly, yeah. They do actually have like thermal materials in them as well. So they've worked on these for a while, and they've got these heads-up displays inside. So they look very cool, something from the movies.
Yeah. I think they look awesome. I can't work out if you need to stay cool or stay warm, one or the other, but they're going to open this thing up and everybody's going to have to wear one because they're going to decompress the whole of the capsule, which is amazing.
Yeah, absolutely. Kate, thank you very much. Thanks for bringing us the analysis. Bloomberg UK airline and space reporter Kate Duffy with her eyes firmly fixed on Florida's Cape Canaveral. We'll be watching that. We'll also be watching what's taking place elsewhere in the United States in terms of the debate, a debate between Kamala Harris, the vice president, and former President Trump. The first between these two.
It's kind of the first but second.
Yes.
The first one was hugely consequential as much as it effectively pushed Biden out of the race, but this is the one that ultimately could have a huge impact on who ultimately occupies the White House next. We're also going to be hearing from Pascal Soriot as well. That stock's down really hard this morning.
Yeah, AstraZeneca facing headwinds in China. We talked about that last week. And also this morning, the news is around a drug trial for lung cancer. So we'll certainly be getting to that. Francine Lacroix conducting that interview with Pascal Soriot. That's coming up shortly. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep rating World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Apple and Google both lose major court battles with the EU over taxes and antitrust concerns. Chinese equities closed near a 5-year low as bearish sentiment grips the market, while European stocks waver as markets await U.S. CPI data. Plus, it's Trump versus Harris, while the Republican and Democratic presidential contenders prepare to face off for the first time in a live debate today. Now, also coming up, an exclusive interview with Pascal Soriot. He's the chief executive of AstraZeneca. We'll talk, of course, about what's in the pipeline drugs and some of the healthcare programs across the world. That's in about 10 minutes or so. First thing is first, let's take a look at the European markets map. Again, a little bit of a wobble. This is on the back of some concerning news from some of the corporates. You can see the FTSE down 0.3%. Overall, the CAC 40 is pretty much unchanged. The DAX over in Germany gaining 0.2%. I guess the market mood, a little bit cautious ahead of some very important print. Again, investors looking to balance some of the U.S. recession fears and the likelihood of a soft landing. Now, a couple of companies that we're looking out for in pre-market, for example, Apple losing its court fight over a €13 billion Irish tax bill and a boost to the European Union's crackdown on special deals doled out by nations to big companies. Now, the EU Court of Justice in Luxembourg backed this landmark 2016 decision that Ireland broke state aid law by giving the iPhone maker an unfair advantage. You can see actually Apple down some 0.6% pre-market. If you look at Google, it's practically flat. Google has lost its bid to topple a once record €2.4 billion fine for abusing its monopoly power to crush rival shopping services, but actually this was pretty much expected, so it's not having a massive impact. And then Oracle reporting actually better than expected quarterly profits. So let's have a look also. Oracle pre-market gaining 9%. The company says cloud services have become Oracle's largest business as quarterly revenue rose by 7% to $13.3 billion. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. It's Tuesday. Happy Tuesday. I'm Francine Lacqua here in London. Now, joining me to talk about data, inflation, and, of course, the markets, Grace Peters, Global Head of Investment Strategy at JP Morgan Private Bank. Grace, as always, thank you so much for joining us. We're definitely in a back-to-school mode. China's a bit of a worry. We're expecting a lot of data, and markets don't really quite know how to behave.
No, this feels uncomfortable, doesn't it? And I mean, our base case is still very much that we achieve the soft landing. And what I think the market is trying to determine is which of the tail risks, whether that be recessionary risks or inflation risks, are the dominant force. And so why I say that feels uncomfortable is a slowdown in the data is a slowdown in the data. We can look forward and anticipate where we think that slowdown ends, and for us that's in trend-like growth for the US and modest disinflation, but it's hard to differentiate in these early days of the data slowing, where that landing point is.
But Grace, I guess that, the million-dollar question is, does the Fed front-load a lot of these cuts? And if they don't, is that a policy mistake?
Yeah, I think there is going to be a degree of front-loading, and certainly when we look at what's priced into the market out to a terminal rate of about 3%, which I think is soft landing territory to us in 2026, you see a degree of front-loading, some 200-odd basis points over the next sort of 18 months or so. To me, that doesn't necessarily mean it has to start with 50 from the Fed when they start its cutting cycle. Our base case is that it's still 25. 50 is innately possible. Francine, I don't know if it matters to markets that much. I mean, this is still, you know, the first cut. It's still going to signify the first of many cuts, I think. And it's right that the data, the Fed remain data dependent. So I don't feel they're behind the curve, but it obviously is time now to cut rates.
Yeah, I mean, there's a big difference actually with what the market is looking at and what chief executives are saying, and that's partly because there is, you know, an obsession with the Fed cuts, the moving, but actually markets go this way, and then you have these bigger pictures, trade, supply chain issues, U.S. presidential election, China. That's not really being priced in.
Yes, I mean, second quarter earnings season was actually pretty resilient. For the S&P overall, you saw 11% earnings growth, which is the best quarter we've seen really over the past couple of years. So I think the message from corporates, whether it be on earnings, you know, share buybacks, capital expenditures as well to invest for future growth, all of that is pretty encouraging. But as you say, there is fragility that underscores that. Driving some of that capital expenditure are these fragilities around supply chains, political risk, geopolitical risk. And so there's a lot to navigate. But I think on balance, you know, we think that this means balance in the portfolio is also critically important. So equities, we still think, are going to be the growth driver for portfolios. So that corporate earnings cycle is super important to us. But the fixed income complex, not just for yield, but also for defensive ballast, as the Fed starts to cut rates, and obviously other central banks as well, is super important. And then let's not forget that we mustn't be complacent about inflation. So whether it be infrastructure assets or gold for some of those geopolitical risks as well, we think that is, you know, a very balanced portfolio that will do well.
Where do you see complacency in the markets? And actually, when you look at, you know, a lot of the equities, some of them are really priced to perfection.
Yes, I think so. I think the market has swung perhaps too far to worrying about recession risks, and particularly after, you know, the summer jobs report that we got, the July jobs report. That swing was too far. And, you know, as I say about those tail risks, that innately means to me that it's worrying a lot less about inflation. I do think, based on the data we see, that's right, but I think we shouldn't get complacent to say that inflation, you know, the disinflation path may be bumpy, so that may not, you know, also come to pass. And I do think that concentration risk is real. I'm not overtly... I wouldn't say that gives the whole picture, because when we think about just the concentration of the equity market, there's also, you know, that's driven fundamentally by earnings, by capex, that's driving capital expenditures, and as long as a return can be earned on those capital expenditures, I think that actually that technology complex can do well. But I would argue for more breadth to the market as we go through the next 12 months.
And Grace, how do you see oil at the moment? So you could say that actually it's a bit of a stimulus for the world economy, or you could say the fact that it's fallen, not sharply, but it's fallen,
yes,
is the earliest indicator of a possible worldwide recession.
Yes, I think it has fallen, you know, as you say, because of the China data, manufacturing generally being perceived to be weak. We actually think, you know, below $70 WTI is an interesting buy level for oil. Our target is around $80, just below $80, looking over 12 months out. But obviously that's a key part of headline inflation as well. So this fall in the oil price will probably help bring headline inflation down over the medium term. But oil is the key transmission mechanism, I think, for many of these geopolitical risks. So when we're thinking about, you know, when we start to worry how the market prices geopolitical risk premium, primarily we do think that will be through the oil market, and therefore having some exposure to that as a kind of hedge. Probably gold would be my preference, but oil could also be a way to access that in the portfolio.
Grace, when we hear some of, I guess, the campaigning policies that Donald Trump has put in place, which is, you know, on the economy, like possible tariffs, possible like trade concerns if you're looking to buy less dollars, how do you model that? And actually, the markets have been largely ignoring it. Is it just because we don't really know how it works out, or because it's campaigning noise?
I think think the markets are of the view, which I would share, that it's policy over politics, first and foremost. And we've obviously, as we've just discussed, there's a lot going on the policy front and trying to anticipate the extent of the cutting cycle and what that means for risk assets. And of course, a lot of the politics is still unknown. What I certainly feel is that over summer the race has tightened up. There are going to be topics that we're watching. So tariffs, trade policy, taxes. When we think, immigration would be another one that we need to, see what actually plays out. And they all have the possibility of impacting markets. But I still think when we look back in history, markets go up because GDP grows. And if anything, the longer-term themes around AI and productivity gains have the potential to influence GDP more over the medium term with an upward bias if we can actually harness artificial intelligence. So I think that's why the market's focusing on that. I would expect volatility, as we've seen since the start of August, to pick up. I do think that we're going to see more volatile markets, and for investors who can, to us, that means opportunities and structured notes that we would use to sort of monetize some of that volatility.
So interesting. It's true, these markets freak out. There's a big sell-off, but 3 days afterwards, they're usually fine.
It is. We still think you can buy the dip. Equities, as I said, still the growth drive of the portfolio. But yes, I think that volatility, that two-way tussle will prevail.
Thank you so much, Grace, as always, for joining us. Grace Peters, Global Head of Investment Strategy at JP Morgan Private Bank. Coming up, AstraZeneca has rallied to become the UK's most valuable listed company. But today, it's the biggest faller on the Euro Stoxx 600. Now, we discuss the headwinds facing the pharma giant in our exclusive interview with the chief executive. He's Pascal Soriot. That's coming up next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Welcome back, everyone. Now, AstraZeneca recently became the first British company to reach a market value of more than $200 billion, or actually £200 billion, with a big bet on cancer drugs, helping to drive a rally in the pharma giant. Now, shares lower today after a lung cancer drug it's developing with partner showed mixed results in a late-stage trial. Now, joining us for an exclusive conversation on that, but also much more, is Pascal Soriot, the chief executive of AstraZeneca. Pascal Soriot, as always, thank you so much for giving us a little bit of your busy schedule. Now, you published some disappointing results overnight in this late-stage trial of a lung tranker, which you could still develop in the future, but are you worried that this will affect your numbers?
Good morning, Francine. It won't affect our numbers because actually, first of all, the study, I think it's important to remember, it was a second study in second, third line metastatic lung cancer. That study is actually positive. And in the group of patients where we're looking to get approval, the so-called non-squamous group, we delivered a 2-month improvement in overall survival versus a very active standard treatment, Taxotere, which hasn't been beaten by any other therapy for the last 20 years or so. So a very strong set of results. Not as perfect as we would have liked. And of course, as a result, people are questioning what kind of approval we will get. We're always looking at targeting patients who will benefit the most, deliver the better risk-benefit. So we've also been developing an AI-based test that will enable us to treat the patients who will deliver the most benefit, the so-called TROP2 positive patients who have a receptor on their cells. So with this, we believe that we have a way forward and should really not affect our numbers in the long term.
So you still have this ambition of reaching $80 billion actually in sales by 2030. Do you think you'll get approval or some kind of other approval for this drug?
Yeah, I think we will get an approval. The question that people are debating is what kind of approval we get initially in second line. I think it's important to remember that the vast majority of the potential of this medicine is in the first line metastatic lung cancer, which we are developing right now. We have several studies, and we have really good hope and good reason to believe those studies will be positive. We also have presented at the World Lung Congress a study called NeoCOAST, which is in earlier lines again, that was very encouraging, very positive. So the big potential is in the earlier lines of treatment, and that is going very well. So that is not affecting our confidence in the drug. And beyond this drug, we have many others, of course.
Pascal, you're one of the industry leaders, of course, in oncology, but also cardiovascular and respiratory. What other areas do you earmark for growth? And do you have the internal capabilities of doing it alone, or are you targeting M&A?
Actually, we can do it alone, and our focus is cancer, of course, as we just talked about. And in cancer, we are developing a whole range of products, antibody-drug conjugates, bispecific immunotherapies. And importantly, we're also working very hard on cell therapy. And cell therapy is opening the potential to cure some cancers. We're also working on technologies like T-cell engagers, so a whole range of new technologies that will improve the treatment of cancer. Outside of cancer, we're working on cardiovascular disease, metabolism. We have a whole range of products to treat obesity and metabolic diseases. And then we're also working on respiratory immunology and finally on rare diseases. So you can see that our whole portfolio goes much beyond Dato, the product we were just talking about a minute ago.
There have been a lot of questions, of course, about your site in Liverpool. Has the government reduced state aid available for this investment?
We are still in discussion with the government. We are committed to this investment, but of course, we have to wait for the final conclusion of this discussion. I can't say much more at this point. It is an important investment for us in the UK, of course, an important investment for pandemic preparedness. But I can't say much more at this point.
Is the UK lacking incentives for manufacturing and R&D investments in general, or is this also something that's under negotiation?
I think the government has really been making quite a number of efforts to attract investment in manufacturing. The bigger issue in the UK, quite frankly, is access to medicines. Pharmaceutical companies want to invest in research and development in countries where they believe their medicines will be able to help patients, so they will be reimbursed and patients will be able to benefit. And in the recent past, access and reimbursement has become more and more difficult, not only for us, but for other medicines as well. And that's probably the biggest disincentive to pharmaceutical company to commit and invest in the UK.
Pascal, several AstraZeneca employees have also been detained in China in relation to 2 probes. Are you aware of AstraZeneca actually breaking any laws in relation to those investigations?
Yeah, it's something we take very seriously, of course. It's important, though, to remember the context of it. It's a small number, 8, 9 employees that are affected by this investigation. We have 12,000 field-based employees in China. It's a big country, as we all know. We are the largest pharmaceutical company in China. We have almost 17,000 employees, 12,000 in the field. So we are looking at a smaller number of people. We have strong policies, compliance policy. We train people. We, of course, investigate. But it's impossible to have a compliance officer being each and every one of our field-based employees. So we are working very closely with the authorities, and I think actually what the government is doing is not affecting us only, it's affecting other companies. And it's a good thing because we need to really make sure that we can operate in a very compliant environment in China like everywhere else in the world.
But what are some of the key threats for AstraZeneca in relation to doing business in China, and how can you actually mitigate some of those risks?
Yeah, of course, we are all aware of the geopolitical tensions between the US and China in particular. So what we have been doing is, of course, follow the laws and regulations in the US, in China, everywhere. But also we've been building our supply chain in China so we can supply China from China and also supply some emerging markets from China. So we have several new investments, manufacturing investments in China for many of our new medicines. And in parallel to this, we're investing in the US. Recently, we invested in a cell therapy manufacturing plant in the US, in Maryland. So you can see we're building 2 supply chains that are going to be independent from each other and enabling us to supply China on the one hand and the Western world on the other hand.
Would you ever actually consider spinning off the business in China?
No, I mean, it's a very important part of our company. First of all, there are lots of patients who need our medicines in China, but also importantly, in the last 3, 4, 5 years, China has become a very important part of global innovation in our industry. There are lots of new medicines that are invented in China that we can license in or co-develop with Chinese companies that will benefit people around the world. So we believe that China will remain an important part of our company, not only because we sell there, but also because we manufacture, export, and also can source innovation from China that will benefit the entire world.
You mentioned the U.S. What do you need from the next president of the United States of America when it comes to healthcare?
Yes, I was listening to Grace Peters, who was with you a few minutes ago, and she was talking about policy. Essentially, we need policies that will support innovation in our sector, innovation in biomedicines, innovation in research and development. The US has been the country that has been driving innovation in our industry, in life sciences, for many years. And I believe will remain so for a long time to come. China is the other big driver of innovation. Unfortunately, Europe has been falling behind. So what we need is continued investment in basic research. We need a continued investment in biotechs, in startups, through private investment that is, of course, incentivized to invest in those emerging companies. And finally, we need, of course, access for our medicines. So that is really a key part of incentivizing pharmaceutical companies, make sure that their medicines can actually help patients.
I mean, looking at your share price, where does the market most underestimate AstraZeneca?
I think the market underestimates the strength of our portfolio and the growth we can deliver over the next number of years. The pharmaceutical industry is not a very simple endeavor, as we all know, and And it's not for the faint-hearted, and you never will have a linear development. You have ups and downs, and that's what we've had in the last 10, 12 years. But in general, we are moving in the right direction. We have a very strong portfolio, and people are underestimating several of the products we have in the portfolio and reacting to events that happen on a day as opposed to sometimes looking at the long trend. Our long-term shareholders, they of course look at those events, but they keep their eye on the long term, which is, where we can be in 2030 and beyond. And that is clearly a good place because we have good development plans and we'll continue growing.
So, Pascal, given the setback with Daiichi Sankyo, what are you most excited about of what's coming up in the pipeline?
Well, I should say Dato remains a very important product for us. It's a setback in time, even if it's a setback. I mean, we'll have to see what the FDA decides. But even if we had a more limited approval than we're looking for, we don't know what we will get. We have to wait for the FDA. But it's a timing issue because this new test we have developed will enable us to expand our presence and our use in second, third line. And then we have the studies in first line. And then thanks to this test, we'll go into other indications potentially, breast, of course, but also many others. So that remains an important product. Our portfolio of antibody drug conjugates is very exciting. Our bispecifics in oncology are very, very exciting. Our portfolio of products in obesity and cardiometabolism is also very exciting. Cell therapy overall, both in oncology and immunology, is very exciting. So there's a lot of products that really are going to change the future of medicine and drive our growth.
Thank you so much for your time today. That was Pascal Soriot, of course, the Chief Executive of AstraZeneca. So we'll keep a very close eye on what, of course, AstraZeneca will do in today's trading session, but also throughout the next couple of months. The other story we're watching out for is Apple. Now you can see Apple actually losing its fight over a €13 billion Irish tax bill. This, of course, is a boost to the EU's crackdown on special deals being doled out by nations to big companies. So you can see Apple is down 1.2% pre-market. Google is actually unchanged. Now, the EU's Court of Justice in Luxembourg backed this landmark 2016 decision that Ireland broke state aid law by giving the iPhone maker an unfair advantage. And then when it comes to Google, it lost its bid to topple a once record €2.4 billion fine for abusing its monopoly power to crush rival shopping services. Again, this was pretty much expected and priced in. No change in the share price. Coming up, Kamala Harris and Donald Trump prepare for a primetime debate. We get, of course, an overview on tonight's key election moments. That's coming up next, and this is Bloomberg.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Apple and Google both lose major court battles with the EU over taxes and antitrust concerns. Chinese equities closed near a 5-year low as bearish sentiment grips the market, but European stocks waver as markets await U.S. CPI data. Plus, it's Trump versus Harris, while the Republican and Democratic presidential contenders prepare to face off for the first time in the live debates. Now, in a moment, we'll talk about the Apple and Google e-rulings with Matt Bloxham from Bloomberg Intelligence. We may talk a little bit about space as well, but first, Donald Trump and Kamala Harris are preparing for what might be the biggest night of their campaigns, their first televised debate. Now, for more on all of this, we're joined by Bloomberg's EMEA News Director, Rosalind Matheson, who's here with us now. So, Ros, first of all, I mean, these things matter. I'm excited. This is like the best show on earth, but it matters to the voters, and we could see polls changing on the back of this.
Well, that's right. It's interesting because sometimes these debates don't matter. But as we've seen, for example, with the debate that happened between Donald Trump and Joe Biden, that proved to be very consequential for Joe Biden. And this one for both Kamala Harris and Donald Trump could matter because the polls are so close within the margin of error. And this is a moment to reach voters on a key thing, which is the economy, because we know there are several, 6 to 7 swing states, which could be, the ones that help decide this election. In those swing states, voters care about the economy. So what we want to see from this debate is really both these candidates laying out their stall on economic policy. Kamala Harris, who's perhaps less known, within America for her economic policy, what is she going to stand for in terms of certain tax cuts for support for people who are perhaps struggling with the cost of living in the US, needing help to get on the board with buying a house, for example. Some of that, we're going to see that from her. We're also going to see, how do they just face off against each other in the minute? It's an unusual debate in the way that it's set up. They won't be able to really go at each other, interrupt each other, and so limited ability to do that. It's more like you say your thing, then I say my thing. It's quite an unusual debate. So how do they present themselves in the minute, with that?
And so personality-wise, I mean, Donald Trump's in the past been very much on the attack line. Do we know the strategy under, behind the Harris team, or how much does it have to do with personality? I know it's policy and economic policy, but actually personality is what a lot of people will vote on.
Yeah, very much so. And we've seen Donald Trump try a bunch of attack lines against Kamala Harris so far. He's called her a communist. Comrade Kamala is kind of a common one. But he hasn't really landed on something that seems to be resonating for now beyond his own base. And again, trying to draw those swing voters over. So what's the attack line that he's going to use, in the debate to do that? And also for himself, the narrative now is about his age. Of course, like Joe Biden is out of the equation. So Donald Trump needs to present himself as agile, nimble, quick thinking in the minute, because those questions about age are now on him. And he's saying for Kamala Harris, it's about showing that she's got the policy heft, to be president, to lead on the economy, and to speak directly to those swing state voters.
Yeah, it'll be interesting to see what they say on China. As always, Ros, thank you so much. Ros Matheson there, our Bloomberg EMEA News Director. Now, and also breaking news this morning, tech giants Apple and Google have lost their cases in the European Union's top court, putting them on the hook for billions of euros in fines. Now let's get more with Matt Bloxham from Bloomberg Intelligence. Matt, thank you once again for joining us. We have to also talk about Apple and the new iPhone 16. But actually, if you look at the share price, they haven't moved, but it feels like these court decisions are big and could be a blueprint for the future.
I mean, yeah, they're big. Although I guess in the grand scheme of things, even the 13 billion euros against Apple, for a massive company like that, it's nothing. Yeah, and it's been on a scroll for a long time anyway. Yeah, I mean, I think you also have to put into context that these rulings reflect situations that are kind of 7-8 years old. Right. So from the European Union's perspective, if it takes you this long to impose stuff, then something's not quite right. And they recognise that. And so actually what you've got now is the Digital Markets Act, which is there particularly to kind of try to manage these issues that came up in the Google case. So I think, you don't think you can kind of put too much into these specific cases, but more about what's happened more recently with the Digital Markets Act, which is intended, A, to police these tech giants more effectively, and B, to get to the point of finding them more quickly. So I think that's the thing we're more focused on, and that's been playing out for the last couple of years or so.
So yesterday we talked about the Apple 16 and this, visual intelligence. Mm-hmm. Is it going to really drive a bit of an uptake for Apple, or not so much?
I think in the near term, probably not. I mean, inevitably, because it's the new phone, you're going to see a big uplift in volumes in the December quarter, but probably nothing more than you'd usually expect for an iPhone refresh. I think what's more significant is going into next year, when more of the features they talked about yesterday actually become available on the device, that you start to see perhaps more consumer interest and a bit more of a ramp up in demand. So it may well even be until we get the 17 next year before you actually see the possibility of a much bigger kind of super cycle and another kind of big smartphone race, if you like, about these new AI capabilities. And you're only really scratching the surface. You think about, the operating system they're rolling out, 18, is the first one that really integrates this kind of software and technology architecture. And so we'll have to see what the kind of the app environment does that takes advantage of these capabilities. And that's probably going to be a 2 to 3 year playbook, I think.
Talking about space, so this is quite exciting, although it was postponed. This is a SpaceX launch, which I think is the first, time that they basically, it's the first private walk.
That's
right.
That yes, private
spacewalk,
non-professional space. Yes, a Polaris Dawn, which is this kind of privately funded mission for astronauts, commercial astronauts going up, and we're going to see 2 of them go on a spacewalk. It's exciting in lots of ways.
What is exactly a spacewalk? I mean,
so this is actually quite an interesting one, because they're going up in this kind of Crew Dragon capsule. They're going to completely depressurize the capsule, open it up. 2 of the astronauts will stay inside the capsule. 2 of them will go out and do a bit of a spacewalk. Then they'll get back in and repressurize it. And part of this is about doing all sorts of scientific experiments to see how the human body copes with space, and that's really important for kind of longer distance missions to the Moon and Mars. And obviously they're testing this SpaceX spacewalk suit, which is going to be really important if we really are going to build space stations on the Moon and on Mars. You're going to have people outside in these environments. You need them to be wearing cost-effective and also kind of protective clothing. So this is the first big test of that suit. So there's lots of exciting things going on beyond just the fact that this is a spacewalk and it's a kind of privately funded venture.
So exciting. Matt, thank you so much. Matt Bloxham there from Bloomberg Intelligence. Coming up, the drama behind the AI revolution. We discuss the new book, Supremacy, by Bloomberg Opinion's Parmi Olson, how the visionaries of the technology are helping to consolidate power amongst corporate giants. That's next, and this is Bloomberg.
It's the world's second largest economy, with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
Now, artificial intelligence continues to, of course, divide opinion. Some say it promises a path to utopia. Others say it could ultimately bring the collapse of civilization. Now, Supremacy, AI, ChatGPT, and the Race That Will Change the World is a new book published today. It's quite exciting in the UK by Bloomberg Opinion's Parmi Olsen. Now, it really delves into the drama behind the tech revolution and how visionaries like Sam Altman and Demis Hassabis helped consolidate power among corporate giants. Well, Parmi Olsen joins us now. Parmi, I'm actually reading it right now, and I have to say it's a fantastic read. You know, you pull no punches, it's to the point, and it's just smart. No other organization in histories have actually amassed so much power. I mean, it's incredible when you look at the figures of how Google and Microsoft are doing, and you focus on two pioneers, basically Sam Altman and Demis Hassabis, and how they sold out to these big giants. Why is it so important?
So, exactly as you said, these companies are, bigger than any empire that we've seen in history, whether it was the Roman Empire or any other company. They have such a big part of the market today. And what I found really fascinating about the AI boom is that it actually started the most recent boom with this real humanitarian effort. And it was led by two different guys on opposite sides of the ocean. Demis Hassabis, who was the founder of DeepMind, and Sam Altman, who was the founder of OpenAI. And Demis was the first one, actually, to pursue this crazy idea of building artificial general intelligence, which is AI that is as smart as or smarter than a human. And his view was, once we reach that, we can solve all sorts of problems. His motto was, solve intelligence and solve everything else. So he talked often about curing cancer and solving climate change, even unlocking the mysteries of reality in the universe, like really grand, ambitious stuff. And Sam Altman, also a few years later when he started OpenAI, he was saying, once we have AGI, we will be able to bring abundance to humanity. So his vision was improving the wealth of everyone on Earth, which is all very noble. But of course, what happened is building AI is incredibly expensive, as I think businesses and the markets have discovered in the last few years. And these efforts that both these men pursued ended up getting them sucked closer and closer into the center of gravity of these large tech companies, because they needed to align themselves with these firms to actually make these dreams come true. And of course, what ended up happening is the humanitarian efforts sort of faded away, and we now have a much more profit-driven approach to the technology, which is fine in and of itself. My concern is the regulatory vacuum that this is all happening in.
Yeah, and again, you explain it so well how big these companies are. So how threatening is it, the concentration power of AI?
Yeah, that's, I think, is what is so interesting. And we've seen it play out even in the last year. This concentration of power in AI is just increasing. For example, some of the most promising AI startups like Character AI, Inflection, and Adept, these are all companies that have raised billions and reached multi-billion-dollar valuations. And yet they've all been acqui-hired by the likes of Amazon, Google. And I think what this means is that ultimately this incredibly transformational technology which is going to be more transformational in the next 5 to 10 years. I know there's been a bit of skepticism in the market about how much it really is going to improve profits and so forth. But it is, my belief, it is going to be transformational, is increasingly controlled by just a few players who are increasingly opaque. They are not transparent about how these algorithms work or the training data behind them, and they set their own rules as well. And what I found really interesting, and the reason I wanted to tell this story, is because it's an allegory for governance. Now, the whole topic of governance is incredibly dry, and people don't like talking about it, like regulation puts people to sleep. But in this story, well, sometimes, unless you like really follow it well and you like to go down the rabbit hole. But in this case, both these men had their own efforts to create a responsible governance structure for AI because they knew early on that it needed to be protected. So they tried ethics boards, they tried nonprofit structures, and in both cases, those efforts failed. And so I tell that story of exactly how that happened, and I think it's a little bit of a red flag that even the people who created this, the visionaries behind this technology, knew early on that it needed responsible governance, and it just never actually happened.
Parmi, is that the price we have to pay for innovation? When you speak to a lot of these, tech giants, they say, well, we're doing a lot of things internally that actually will make it safe and better. And then they'll say, you can't regulate it too soon because then we'll never see the full potential of this technology of AI. Like, who's the right body to regulate it? Who's thinking about this?
It has to be outside the company. It just, self-regulation does not work. It only works to an extent. And it's certainly nice to see that companies do try to put in guardrails themselves, but ultimately, and as they should, they have a fiduciary duty to shareholders. And there, as yet, is no real regulatory framework for artificial intelligence apart from the European Union's AI Act, which hasn't been enacted yet. People are still unsure. Like, I've just been to Silicon Valley, and some of the startups and companies there are kind of complaining about the act because it's not specific enough, and they say, oh, it's just going to be a lot of bureaucratic nonsense. But, this is the kind of struggle that we're going through right now, and I think we do need to find that balance because exactly as you say, there's a price for all innovation. And that's what happened with social media. Mark Zuckerberg wanted to connect the world, but we also got out of that, in many cases, a mental health crisis, particularly for teenagers.
Regulates or even break up some of these big giants?
Well, we know that there's certainly efforts going on by the FTC and the DOJ, and there's this whole antitrust case against Google, which is really moving forward, and there's talk now about Google potentially being broken up. There's two different views of that in Silicon Valley. Some venture capitalists really like that idea because they feel their companies are enthralled to big tech and are locked into using them as cloud providers and in all sorts of relationships to build their companies. Whereas others say, actually, we want these companies to stay big so that we can have an exit, so that we can sell our startups to these big companies. So there's a real divide in the tech industry about whether that's good or not. But I mean, broadly speaking, yes, I think these companies do have way too much power.
Parmi, thank you so much. Well, for the book, it's, I think, my book of the year. I mean, we still have a couple of months left, but it's interesting, and you really bring it alive, actually, with, we speak about these challenges as kind of like, sometimes a little bit disconnected to the people that founded them. Parmi Olsen from Bloomberg Opinion with her new book, AI, ChatGPT, and the Race That Will Change the World. Coming up, a deepening sell-off in Chinese stocks is intensifying a crisis of confidence in the world's second largest economy. We talk about China next, and this is Bloomberg.
Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Record returns are now potentially a record glut. After outperformance for years, higher rates have resulted in over $3 trillion held up in aging, closely held companies. Now, opening trade anchor Kriti Gupta is live in Paris at the EPEM conference to break down the debate. Kriti, great work all day. So Mario Draghi talking about competitiveness. How's that being received on the ground?
Well, it's being received kind of well, actually, Fran, and this is really interesting because on the outside, when you have this report of Mario Draghi in Brussels and others, by the way, calling for investment in Europe, a lot of people are looking at that and saying, with what money, with what fiscal budget, when you're looking at some of the deficit issues in France, in Germany, and other parts of Europe as well. But here is where private capital is here to shine. The conversation on the floor is that this could actually work well for private investors looking to find spots of opportunity. Take a listen to what the head of Europe over at Apollo had to say on this. Rob Seminara commenting on this very dynamic.
We think this is a golden opportunity for private capital. We've been talking to date right now just about our private equity business, but if you look at our private capital and our credit business, it's $520 billion that we want to invest. And the nature of our capital, it's either in long-term locked-up funds or it's in regulated balance sheets, which are very long-term capital. And that makes us a great partner for corporations that want to invest long-term.
Rob Seminara there, the head of Europe over at Apollo, one of the major funds that are behind this drive in Europe. Francine, if there's no money from the public markets, no money from the fiscal governments, where does the growth come from? And he and some of the colleagues here at EPEM are making the argument that it actually comes from private investment.
So, Kriti, what kind of deals are actually happening in Europe, and how is it different from the U.S.?
Well, the thinking here is that you can't actually apply the same roadmap that you have in the U.S. to Europe. And a lot of it is the way that businesses are actually structured here. Now, we know the obvious, that the capital markets aren't as deep here. They're not as liquid here. And they're also not as efficient here as they might be in the United States. But that is where the opportunity lies. At least that's the commentary coming out of the likes of KKR, of course, managing just shy of $700 billion in AUM. This is a really big deal because take a listen to what Elisa Wood, a partner at KKR, had to say when it comes to where the deals are actually coming from.
Putting capital to work. 80% of the deal flow that we've done in Europe, the deals that we've invested in Europe in the last 10 years have come from these family partnerships, right? Yeah. That's creating a huge amount of opportunity where we can be a partner to those companies. The companies are focused on really one main thing. How do they grow, right? How do they increase their operational alpha? Because that's the competitive advantage at the end of the day. And that's where the returns are coming from. Yeah. 80% of our returns are coming from growing the bottom line of our companies and being thematic investors, not riding interest rates.
80%, Fran, 80% of their deals are coming from family offices. Basically, these closely held companies, first generation, second generation wealth, they've been inherited and kept in the family for generations and for years to come across France and Germany. You have private markets, private investors coming in and saying, well, give us some of the float, give us some of the rights here to actually loosen a little bit of that liquidity. So now other investors, global investors, can take a share, can take stakes in what has been these companies held by, again, European families for such a long time. You see this in luxury, Fran. You have these conversations all the time. But now you're starting to see it in other places, in manufacturing, in industrials, even most recently for KKR, in the satellite business out of Germany.
Interesting. Kriti, thanks so much for all of the hard work out there in Paris. Kriti Gupta there with the very latest on private equity. Now, a deepening sell-off in Chinese stocks is exacerbating a crisis of confidence in the world's second largest economy. The benchmark CSI 300 actually closed near its lowest level since January 2019. So let's bring in Bloomberg Markets Today managing editor Christine Aquino. Christine, it's so good to have you in London. Welcome. When you look at some of the concerns around the Chinese economy, it's really starting to hit stocks, but also just investor confidence worldwide.
Absolutely, Francine. I mean, this $6.5 trillion route, that's really going to rattle a lot of just consumers locally. And that really is the concern, right? Because China has started to kind of like move its economic model from being the manufacturer of the world to really focusing on its domestic population, which is massive. And the problem at the moment is that consumers really are just not feeling confident. And the issue here is really what that does to spending, what that does to kind of perceptions of inflation. In fact, there is a fear that China is now going to dive into a deflationary spiral as a result of just consumers not really having that confidence and not really feeling healthy at that moment.
And so you can feel that in commodities, for example, with the price of oil going down.
Absolutely, Francine. I mean, this is definitely a story that's being watched for commodities in particular, just because, you know, it's a big demand coming out of China here. And the fact that we have this economy that's really faltering at the moment, not necessarily seeing any signs of imminent broad support from Beijing, that's really going to do a number on that consumer demand there. And of course, you know, for commodities, oil specifically, we have other cross currents as well. What's OPEC Plus going to be doing in terms of supply? We know that there is a temporary kind of pause on that conversation, but, you know, that's going to return back to the radar probably toward the end of this year. And so it really is a commodity story that's starting to look very negative heading into the end of this year.
Yeah, and it's going to be tricky in the next couple of days because we have ECB and then Fed next week.
Absolutely, Francine. And, you know, I think this is definitely going to be at the back of minds of policymakers. Of course, you know, they're not really making policy for China. They're making policy for their own domestic economies. But when the world's second biggest economy seems to be just really struggling at the moment, you've got to be thinking as a policymaker, right, how do you mitigate against that, especially if there's a danger of a spiral?
Christine, thanks so much. Christine Aquino there, Bloomberg managing editor of Markets Today. Now, coming up, we also have live pictures from Cape Canaveral in Florida. SpaceX's Falcon 9 rocket waiting for liftoff after missing a potential launch opportunity over the past hour.
Make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating, and then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Good morning from our global headquarters in New York. I'm Menace Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set your agenda.
A double whammy for American tech. Apple and Google lose in separate legal fights against the EU Court of Justice. But it's a win for the banks, a dramatic retreat for capital required for the biggest U.S. banks. Going head-to-head, the nation counts down to the first debate between VP Harris and former President Trump tonight in Philadelphia. Good morning, Manis.
Danny, good morning. These markets, so much for buy the dip. It didn't last very long. We're flat on the S&P 500, 54 at 74. Goldman Sachs say that equities, hedge funds have been sellers for 8 weeks in a row, and they've been selling U.S. equities. 2-year yields, curb your enthusiasm. We wait counting down to CPI. The market retraces on jumbo rate cut bets. And Eurodollar 110.38 as Morgan Stanley talk about a 7% drop by the end of the year. Why? Because the ECB will cut by almost 110 basis points, way over where the market estimates at the moment. And there's the print on Apple, 1.25% lower on the back of that ruling in the EU. We'll talk more about that in a moment. Our guest this morning is Ella Hodja, head of fixed income over at Newton Investment Management. She weighs in on the markets writing this. We remain on the conservative camp with regards to the risk in markets and are positioned thus. The core vector driving the view has been the odds of a weaker cyclical backdrop ahead of us over the next 6 to 12 months. Ella, good morning. Good to see you. To be conservative about risk, can you just expand on that? What does that actually mean?
Well, for us, effectively, it means that the risks of potentially bigger cuts on interest rates, a weaker cyclical backdrop, potentially even wider credit spreads, and weaker commodity currencies or emerging market currencies is the better expression of that view. So conservative position means we have low exposure to some of those vectors and more exposure to higher interest rate sensitivity or duration, as we call it in bond land.
What do wider spreads look like in credit, Ella, where you see issuance continue at a record pace, you see demand for that issuance, no signs of abating? What does it look like when it turns?
We got a mini episode, I think, at the end of July and August. So we saw crossover spreads, so a measure or a gauge of that sensitivity, or spreads on investment grade credit, spreads on high yield particularly. So they widened, but it was very short-lived. So it was speedy, but very short-lived. And then we went back to this buy the dip mentality, and spreads tightened into September. So I think that mini episode, if validated as a view in terms of a weaker cyclical backdrop, then those spreads would widen significantly from here. So that would be the anticipation.
So then do you double down on core treasuries? As HSBC said to us yesterday, it's no time to pull out of your bullish position on bonds.
We have been adding actually as of Friday, so we've been managing the position side on duration, particularly given the big moves we had in July and August, and now we've actually come back to increase exposures. Funny enough, treasuries, yes, is one place, but we added further to our long end of Japan position. We've discussed that here in the show a couple of months ago, so I think that looks good as a position for us. It has a lot of convexity, and it's the steepest curve in G10, so it was a better, more efficient way to increase some duration risk to a global portfolio.
So Ella, as you shift to a more defensive type portfolio, what's driving that? Sure, the labor market trends are one of, but GDP continues to come in strong. Corporate earnings are staying afloat, and we got consumer spending and consumer credit data yesterday that showed that the U.S. consumer credit released the strongest monthly rise since October of 2022. What are the red flags you see in this economy?
For us, jobs has been the first one, and particularly so things like quits ratio, job openings, so this hiring confidence type indicators. Why? Because they're far more forward-looking, and we're in markets we're supposed to be forward-looking. A lot of the indicators that we're highlighting here, basically on the GDP side, tend to be more coincident in nature, so they're not telling you a lot about what's coming down the road. Now, I cannot say this is a 100% confidence view, right? Because we don't have a crystal ball, and it's very difficult to foresee macro, in my opinion. But the odds certainly are that what the jobs market is telling you is that things might be weakening a lot further down the road. And so, given particularly where valuations have been, especially if you started back in April and May, the odds were in your favor to sort of start positioning for that view. And we tend to think a lot more probabilistically in that sense. So jobs are what's concerning us. Low level of savings for consumers in the U.S., consumer confidence, those are probably some of the vectors, but also the manufacturing sector, which tends to lead the services sector, is also very weak in the U.S. So I think there's enough there to sort of, relative to valuations in markets, to get you concerned from a portfolio management perspective.
Is this part of the reason why you want to add to the dollar? Look at Morgan Stanley's call this morning. They're talking about 102 on the euro dollar, and that's predicated on 110 basis points of cuts. What's your view or the rationale for adding to the dollar?
Well, we initially started to add further to the yen positions because that seems like a bit of a cop-out, if you like. So, and we've been more contrarian on the yen angle. We've spoken here before. Dollar more in the predicament that if we have a weaker cyclical backdrop, you go back to that famous dollar smile, rather than actually we're going to get less cuts from the Fed. So that's the view that's driving that. On recession, the dollar tends to do well just because it's a risk-off metric. But I will concede, I don't have a lot of confidence in the dollar here, particularly because we have an election, and perhaps a Trump win could set up a very different position for the dollar. So we will need to be a bit more reactive. So here, a little bit long of the dollar, I would say. Probably the long yen dominates our FX positioning. But let's see, with the dollar, I'm a little bit more iffy, I probably would say at this point. But, you know, gun to my head, I would say still long dollars.
Well, you got a nice risk event to watch out for that tonight with today's debate. Ella, we appreciate your time this morning. Ella Hodja of Newton Investment Management. Manus, let's get to some other top stories that are trending on the terminal this morning. The biggest U.S. banks will see a 9% increase in capital requirements. That is a dramatic retreat from the 19% that regulators had previous plans. The reductions are more likely to appease the biggest 8 U.S. banks that the requirement covers. Banks had fiercely lobbied against the original proposals.
Goldman's trading unit is on track to drop 10% from the prior year, led by a decline in the fixed income business. That's according to the CEO, David Solomon. He also disclosed this at a Barclays conference yesterday, that the bank will take a $400 million pre-tax hit in its narrowing consumer business as it moves away from its credit card tie-up with General Motors.
The U.S. House of Representatives passed legislation last night to blacklist Chinese biotech companies and their U.S. subsidiaries. The bill's backers argue that the law addresses concerns over security. Those concerns were denied by 2 Chinese biotech companies. They said that they don't pose a security risk to the U.S. or any other nation. The bill now goes to the Senate.
Coming up in the show, hang tight with volatility. Buckle up. We'll catch up with RBC's Amy Wu Silverman. She joins us later this hour.
But first, we're going to go live to the EPEM conference in Paris and speak to General Atlantic co-president Gabrielle Caillot. That's next here on Bloomberg Brief.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
It's your Bloomberg Brief. I'm Danny Berger, alongside Manish Krani in New York. Let's head over to Paris at the EPEM conference, where Bloomberg's Kriti Gupta is standing by with a top voice on the ground in growth equity and private equity. Kriti.
Danny, thank you so much. As you said, we are in Paris. There's a lot of conversation about where these European markets are looking at. You know this best, this idea that there's so much capital wrapped up in the private markets right now. We're waiting for it to be deployed into the public ones. What does that timeline look like? And does it differ from what you see over in the States versus Europe? We have a perfect voice, as you said. Gabrielle Caillot over at General Atlantic, the co-president there, joins me here in Paris. Pleasure to have you on the program. Thank you so much for joining us. Let's start there. The European investment story, the timeline for this deal making and this kind of return to shareholders. What does that time horizon look like for you?
Yeah. You know, the markets we've always worked in are the innovation markets. And so it's interesting. There's always a perception that Europe lags other markets in terms of innovation, technology, and so on. And the truth is what we've seen is over longer periods of time, it's always somewhere about 25% of what we find is European deals. And the private markets are actually quite efficient. So I think right now there's a lot of talk of, is innovation capital getting to the right entrepreneurs? Are we giving the right access to capital for growth and for sustained growth? We think that's happening. I think there's a broader discussion that's happening right now, which is in the continuum of a life cycle of capital, from the angel investor to the venture capitalist to growth equity like what we do, to then later stage buyout in the public markets. Is there some breakage there where you're not seeing capital flow efficiently to the right companies? And I think that's something we do worry about.
Gabe, Danny here in New York. Really great to see you again. We are seeing in sort of your sort of stage of capital, people like Sequoia facing this pressure to return money to shareholders and doing things like selling themselves their own assets to different funds. Is that still the #1 concerns for your investors, your LPs, getting cash back to them?
Yeah, it's a balance. So it's a good point, Danny, and good to hear from you again. It is a question. You have a lot of LPs. You've seen private markets continue to grow, right? So in a way, and I think that's a natural thing that's going to keep happening, is for many parts of the market, actually private capital is a better product for entrepreneurs than the public capital. But what's happened as a result is we've dragged on a lot of commitments from our investors. Certain investors feel overexposed, and they're asking for investors like us to return capital. I think this is all starting to unwind really naturally. We see it in our own portfolio. Over long periods of time, we've always returned more capital than we've deployed for our investors. That wasn't the case in 22 and 23 when markets were completely dislocated, right? Public markets were shut for capital formation. Private markets were very volatile. Debt markets were dealing with rate rises. That's starting to unfold a little bit into a positive momentum, and we see that in our portfolio. So I think it's going to settle itself out. We certainly don't think it ever justifies doing anything that's unnatural, either for our portfolio companies, our investors, or ourselves. So this idea of selling to yourself, this idea of leveraging your portfolio to take liquidity out, we don't think that's real de-risking. We just think you have to build great companies, and liquidity kind of sorts itself out as markets find stability again.
Gabe, you've mentioned entrepreneurs a few times. What do the headwinds look like in a regulatory environment, both in Europe and the US, where you see regulators cracking down a lot more specifically on tech, something General Atlantic does so much of? Are you concerned that it's hamstringing not just your ability to do deals, but the entrepreneurial environment in general?
I'll tell you, Dan, it's something we worry about all the time. And actually, if you take a longer view of what's happened recently, there's been challenge after challenge to innovation and entrepreneurship, right? Whether it's the China +1 or China decoupling, whatever you want to call it, whether it's tougher antitrust position that rule mergers, whether it's harder access to capital, whether it's it becomes more and more expensive to grow internationally. I mean, all those things are things that we've seen happen in our portfolio, and our portfolio is very global, so we have a good feel for what's happening in each of these markets. But I'll tell you, the reassuring thing is, despite all of that noise, despite the geopolitical risk, despite all the bad things happening, we have seen almost no slowdown in company formation, innovation, almost no slowdown in the growth rate of our own portfolio, right? Our portfolio is a $60 billion portfolio. Right now, it's growing in the mid-30s. So you can see the type of growth at scale that's still happening in innovative and technology markets. And it seems like it's really the disruptive nature of the portfolio is winning over all the short-term noise that's created by some of these headwinds. So we keep a pretty optimistic perspective on it. It's backed by the data in our portfolio, but it's certainly something that, if I think 10 years ago, it has become harder to build a global champion. It has become harder to grow internationally, and that's a shame.
Let's bring it right back to the capital markets, and I think it's where we started our conversation here. What's the benefit of being a public company right now? What's the point of IPOing if you can get these yields elsewhere?
I'm obviously biased in my answer because I'm the private capital person here, but forever, and I think if you'd interviewed me 10 years ago, I would have told you that there was still a real perception in an entrepreneur's mind that when you list your company into the public markets, that gives it longevity, it gives it capital, it means it'll survive forever, and it gave you a way of continuing to grow your business. I think that's what's really changed right now in the eyes of most entrepreneurs, and not in the eyes of private investors. I want the public markets to function and be open, right? It's a fantastic tool for capital raising and capital formation. It's really the eyes of the entrepreneur. The entrepreneur looks back at what's happened the last few years, and there's too many carcasses on the side of the road of the IPO markets. And IPO markets in our markets, so in the growth segments, they become really fickle, right? You have a bad quarter, you're given up on. If you're subscale, you're given up on. And oftentimes, if you want to invest in a 5-year growth strategy, public markets don't have the patience for that. So I think it's a moment in time kind of thing that we need to fix. In the meantime, I think it's great for private capital because we're stepping into that void, and it's providing huge investment opportunity, and probably one of the best I've seen in my career, frankly. But we need capital markets, the IPO markets, to come back.
All right. Gabrielle Callot, of course, the co-president over of General Atlantic, joining us live from APAN in Paris. Got plenty more coming up with Manus and Danny. Stick with us. This is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
It's Bloomberg Brief. Warm welcome back. We're just counting down to the launch of Falcon 9 Polaris Dawn. We're going to take you through that launch in a little while. There is the launch pad. It is Falcon 9 Polaris Dawn. Lots of delays before we got to this. The weather interrupted the earlier takeoff. We'll count you down to that launch in just a few minutes. Let's stay with tech and the broader theme. We've got Apple and Google. They've lost their respective legal cases in the European Union's top court, putting them on the hook for billions of euros of fine. Matt Bloxham is with us from Bloomberg Intelligence. Matt, when we talk about the Apple fine, we must put it in context. This has been dragging on since 2016. It's around Irish taxation, and it's the equivalent of 2/4 of Mac sales. Put the context around this. This is more about messaging than dollars.
Yeah, that's right. It's been a long time coming, and obviously they won't like the outcome. But yeah, lots has happened since then, and particularly in the last couple of years with the European Union launching things like the Digital Markets Act and the Digital Services Act, which are meant to be more robust, sustainable, effective ways to police the big tech companies like Google and Apple. So I think perhaps those cases were like kind of precursors to what we've seen in the more recent times, and it's those things like the Digital Markets Act, which I think are more significant in terms of how companies like Apple and Google are going to be able to operate going forward.
Matt, we're still looking at live pictures of Cape Canaveral of the SpaceX launch of Polaris Dawn. You can see the countdown clock there, less than 3 minutes to go. This will be the furthest that we have traveled in space, save for a moonwalk in the past 50 years since the Apollo launch. What is the hope in accomplishing this for SpaceX?
Yeah, I mean, this is a very significant mission in many ways. Obviously, it's a commercial mission, not a space agency mission, so that in itself is significant and shows you just what's happened to the costs of putting people into space. As you say, that this kind of orbit's going to be, I think, 3 times the height of the International Space Station, so about 870 miles. There's quite a few significant things that are going to happen with this, which are of importance for the kind of longer-term space exploration project that we're looking at. And one of those is that the astronauts will do this spacewalk, or at least attempt to spacewalk out of the capsule, and they will test these new EVA suits that SpaceX has been developing, and that those suits are really significant in terms of future plans to build a base on the moon and potentially a base on Mars. So you need to kind of understand that this technology works and can be developed at scale at a cost-effective price. And there's going to be lots of other experiments they do whilst they're up there, particularly understanding how the human body responds to long duration space flights, which are going to be obviously very significant if we do ever see trips, particularly out to Mars. So lots of significant things going on with this mission.
How significant is this, Matt? We've got Jared Isaacman on board. He'd be one of the people that's doing a spacewalk along with Ms. Gillis. How important is this for the evolution of the private part of space travel?
Yeah, I mean, this is a very well-funded mission, but it is important. I think that what we're starting to see, whereas people used to think that being an astronaut was
hey, Matt,
the domain
can you actually hold that thought for just a second? Because we're getting down to 30 seconds away from this launch, and we want to listen in as they do that. Again, this is the Polaris Dawn. It will take people farther from the Earth than any time in the past 50 years. Let's go ahead and listen in.
T-minus 15. T-minus 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Ignition. Copy, 1 Alpha. Vehicle switching down range.
T+35 seconds into the Polaris Dawn mission, flying crew on board Dragon and Falcon 9 to new heights.
Power and telemetry nominal.
And we're throttling down in preparation for max Q. Next call out, vehicle supersonic. And there on the left side, we got the Polaris Dawn supersonic. Thumbs up from the pilot on the left side there.
Max Q.
We're throttling back up to power. 1 Bravo. And we heard the call out 1 Bravo.
Copy, 1 Bravo.
That just tells the crew what would happen should they need to initiate anything. But right now, everybody making nominal call-outs on Falcon 9. Nice views from the ground camera, and nice views from inside Dragon.
Impact chill is underway.
The announcement lets us know we've begun the final chill of the second stage engine, preparation for its activity coming up in about T plus 2 minutes and 40 seconds. Into flight. Everything continues to look good. We'll have in half a minute 3 major activities: shutdown of the 9 room and 1D engines, stage separation, and then ignition of the second stage engine. Throttle down. We're holding a constant acceleration now for the crew, just below 4 Gs. See, we're coming up 70 kilometers.
Main engine cut off.
What we have seen is the rocket travel through maximum dynamic pressure, also known as max Q. What you just saw was a separation after the main engine cut off. It's the second engine burning, the second engine starts 1, and then they start to reach the injection orbit. Overall, this will go 118 miles above Earth, swing to an altitude of 745 miles. The furthest point, once it goes through its orbit, will be 870 miles. So we're again looking at images of the separation just happening. Let's bring in Matt Bloxham, who we've been talking to about the SpaceX launch while we leave those pictures up there and look at this incredible journey. Matt, before I interrupted you for this launch, you were just talking about some of the people behind this mission. Manus mentioned Jared Isaacman. Just pick us up from where you last left off.
Yeah, you were talking about the significance of this to like kind of the private space industry, and I think it is really significant in a number of ways. One, I think a lot of people have this perception that being an astronaut, you have to be like an experienced kind of probably coming from the military, and if we're really going to see space being a significant part of the kind of human experience, then it's going to have to be open up to people from all walks of life. And I think what we're seeing with this mission and with lots of similar missions we've seen in the last couple of years, that actually, it is possible to train people to be astronauts. And put them up in space and to do it cost effectively. I think obviously we've seen over the last couple of decades that the traditional domain of the national government, space agencies really being the big pioneers of space exploration and innovation has come to an end, and they don't have the money to do it anymore, and that you do need the private capital, the private sector to kind of step in and take things forward, and that's exactly what we're seeing today. And I think you'll start to see even like NASA benefit from some of the expertise and experience we developed from this mission into some of their planned missions to the moon and beyond. So it really is quite a significant step forward.
Well, we're just keeping an eye on that capsule. I mean, they'll travel at 17,000 miles per hour during this journey. Matt, the other aspect this week was the Boeing Starliner returning to Earth without a crew, but safely. And again, this was an important milestone for Boeing in this commercial space.
Yeah. Well, I mean, it's good to see that come back without any incremental hiccups. Obviously, it's still clearly a bit of a niggle for Boeing, the kind of second of NASA's chosen partners to kind of take crews to the International Space Station and then ultimately beyond to the moon. And so, I think to some degree, these setbacks for Boeing put SpaceX even more in the ascendancy in terms of what they can do both in the private sector and for NASA. And obviously the Crew Dragon capsule we're seeing today is exactly the kind of capsule that they use to take astronauts to and from the International Space Station. So yeah, good to see that Boeing got that vehicle back to Earth safely. But I think a lot of work for them to do to understand what went wrong and why the astronauts that were meant to be spending just a few days up at the ISS are going to be there into next year.
Well, we'll leave our audience with an image there of Falcon 9 Polaris Dawn, Matt Bloxham, taking us through the tech stories of the day. Of course, that same capsule went to the International Space Station in 2020. We'll track the journey through the morning. Markets are moving. We've got a couple of tech stocks in focus, but Danny, that buy the dip moment didn't last for very long yesterday, did it?
It didn't, and perhaps it's because it was built on, I don't know, nothing, just sentiment at least. That's how Jim Reed puts it. It is sentiment that drove yesterday's buy the dip, not new data. So in the meantime, S&P futures weaker by 0.2%. Tech underperforms, as you mentioned, Manus, with tax deals and bills being shut down by the European courts. Meanwhile, 10-year yields, little change this morning, 3.7%. They did fall to the lowest since June 2023 yesterday. 30% odds of a 50 basis point cut is where we stand. Brent crude continues to fall, down by 1 1/3. It is near the lowest level in 3 years. So in trying to understand where equities go from this and the very downward trading they've been having, Amy Silverman of RBC Capital Markets writes this: equities caught up with the less sanguine view of other markets, option markets, and on the other hand, option markets have remained fairly bearish since the early August volatility spike. And as we continue to look at pictures of a rocket, we're going to talk to Amy Silverman now. Amy, perhaps we can use this rocket as, I don't know, a metaphor for the bearishness taking off for this equity market. But after the bearishness that we've seen, the worst week for equities since the SVB crisis, have things now matched the more bearish underlying options? Do things look to be more right-sized?
I think a little bit at least, but I don't know that we're quite there yet. It's just been very interesting to me because after that big August drawdown we had, options didn't ever quite right size. And to me, that was a huge inflection point because I know the last few times we've spoken, we've actually talked about the unbelievable exuberance in options that we saw the first half of this year where, there was just historic call buying. A lot of that has been sucked out of the market and unfortunately been replaced by this bearish sentiment we see in put options.
Amy, good morning. Yep, we've got SpaceX taking off. You talk about the airplane's altitude has stabilized, but the passengers have not forgotten the turbulence of August. There you see, we got it in. The question then is whether, are we actively hedging at the moment, or are we trimming risk? Because they're two very different things.
That's exactly right. They are two completely different things. And what I'll tell you is that there is active hedging going on. There's been a pickup in interest. Now, look, when we kind of go back historically, 5 years, 10 years, 20 years, Manus, we're still not at peaks that we've seen before. But given just how much this market had been focused on the FOMO and the MOMO, it's still very interesting, because the fact that we even have this interest at all is something to write home about. You know, one thing I've been saying since, you know, maybe March or April is, how can we have the S&P at these historic levels and just no interest in any sort of hedging, especially just given positioning, right? When you want to protect your portfolio, that conversation has finally started to change. We are seeing that demand for hedging, and frankly, a lot of trades also saying that there's limited upside going into the end of the year.
Yeah, sorry, I just to point out, because there's literally cheering next to you, Amy, while you're talking. The stage 1 vehicle has touched down after separation. Just they are also cheering probably about what Amy is saying, but that's what you're looking at right now when it comes to SpaceX. It is that separation, the stage 1 vehicle touching back down. Amy, back to the picture of volatility. We get a debate tonight. It is closer to the presidential election. How are volatility markets set up for it?
I think we should be watching this very closely. Look, there's certainly a hump in the tenors when you look at November 5th pricing, so the actual date of the U.S. elections. And, you know, the one thing I'll say is the only precedent we've had this year is the fact that we actually changed the Democratic candidate at the last presidential debate, right? And now we were very close in terms of what the polls are saying for Trump and Harris. And so this will be a key to watch. There's obviously a lot of policy implications that come from it. But, you know, a secondary fact we've been talking about is just this idea of, if the election is contested at all, if it is close at all, and we don't have certainty of who the winner is, I think that's something that really can trigger more volatility in the markets.
You just got to go back to that January 6th event. In 2020, 147 Republicans voted to overturn the election. Where is the go-to hedge in that intervening period? Where do you think the market will lean into for a hedge, Amy?
Look, I think it'll go kind of the traditional routes, so your S&P put options, your VIX call options. Certainly you could see it on a sector-by-sector basis, but, you know, in times of really crucial uncertainty, the market goes back to its old playbook, which is always these index-level volatility hedges that we hadn't seen at all during the beginning half of this year. But again, you know, unfortunately has become more of the case that these ideas of a contested election is something that we have to consider as a tail event. And if that does happen, you know, we've seen VIX go back to the 40 and 50s.
So that's one of the risks, Amy, but it seems elsewhere in this market there is a lot of sanguine attitudes about what equity markets do from here. I'm specifically thinking of forward projections for margins in the S&P 500. They're approaching an all-time high. 13.6% is the projection for this time next year for margins for this equity market. That's a whole percentage point more than we are right now. If you look at the analyst community out there and you contrast that with what option markets are telling you, is there still some of that needs to be shaken out? Or are we too positive in what corporations can do a year out, as we're also debating slowing jobs markets and the potential for a recession?
You know, it's such a great question. And one thing I actually like to do, too, is to look at what the analyst community is saying. And I sort of back solve that. So if you actually just take average analyst price targets and aggregate them up from the S&P 500 level, you can get a pretty good idea of what the Sharpe ratios are for the S&P by sector, right? And that's taking into account the expected returns and the volatility we see going forward. I will tell you that most of the upside in the market essentially looks fairly limited. And then the second thing I'd say is all these Sharpe ratios are declining sector by sector. And so I think when the options market is telling you we're selling volatility on the upside to buy volatility on the downside, it's reflective of that idea that we already see in these Sharpe ratios.
You say that the market no longer has a FOMO for AI stocks. What is the consequence of that? Does it bear on rotation?
Yeah, you know, I think the consequences here are huge. And I know people love to get really excited about rotation. Look, I'm excited too. But the problem is the math of the market. As long as we have this heavyweight breadth problem, you know, even if we get a great rotation, even if we get more hands and breadth, We're not going to solve the problem of the market going down if AI is going down. That's fundamentally the issue. You can highly see that correlated to S&P moves and just NVIDIA moves when they have their shout dart tones. So you kind of need to have both working, or at least one being okay. And that's the situation that I think we're most concerned about.
Okay, Amy Wu Silverman, thank you very much. No more fear of the AI trade. You're still looking at a shot of Falcon 9's Polaris Dawn, which took off several minutes ago. There have been a number of delays in this, but it's gone perfectly smoothly. We're just counting down to the next event in this sequence, which is where Dragon will detach from there's a separation that will take place in about 2 minutes. Let's get back to Matt Bloxham. He's with us for this journey, the takeoff. It's gone seamlessly so far. There have been a number of moments in the lead up to this launch where the regulators briefly stopped Falcon 9 rockets from flying. So what kind of changes had to be made to make this event come to pass, Matt?
Yeah, I mean, there's always kind of issues about SpaceX launches and the kind of environmental impact that they can sometimes have. So that we've seen that time after time, and particularly with the new Starship that they're testing right now. So that it's a kind of sensitive interplay between government agencies and SpaceX and other rocket launch businesses. But I think beyond that, there's just all sorts of other issues that come into play. There's just the rockets are incredibly sensitive, so I think that they also had some kind of technical issues with some leaks. And also the weather plays a massive part in it. We've seen that today, that this launch has been delayed by an hour or so, and it's not just having the right conditions for the actual takeoff, but you need the right conditions or confidence that the conditions will be okay 5 or 6 days out for when they do the splashdown of the crew capsule. So there's a lot of different factors that can come into play when you're trying to get people and machines into orbit.
Yeah, and can I just say, at the moment we're looking at some of that orbit, and the pictures are absolutely beautiful of the Polaris Dawn orbiting over the Earth, going towards the sun. Matt, you mentioned this idea that they need to have good weather to land, and there's a limited amount of supplies that they have. What sort of backups? I mean, we learned from what happened with the Boeing Starliner that things can go wrong, and SpaceX has to come save the day. How do these things work in terms of making sure that they are able to get back to the ground okay in the allotted time that they've given themselves?
Yeah, I mean, I think the reality is for a small capsule like this, there aren't many backups, and that you just have to kind of do the best you can to judge it. Obviously, even predicting the weather 5 or 6 days out is an art as much as a science, I think. So I think ultimately maybe they could kind of keep them orbiting for a little bit longer, but they just have to suck it up and maybe give them a more than expected uncomfortable landing. When push comes to shove, it's a little bit different when you've got people on the International Space Station where there's clearly a lot more backup supplies there to kind of keep people going for months. But yeah, ultimately they don't have a huge amount of flexibility in when they bring these people back.
Certainly, and I guess that accounts for some of the delays, making sure that the weather from 6 days from now is good too. Matt, we really appreciate you walking us through the SpaceX Polaris Dawn launch. That's Matt Bloxham there, and we'll leave you with these beautiful pictures as they orbit the Earth.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
It is Bloomberg Brief. I'm Manus Graney alongside Danny Berger here in New York. It is the biggest U.S. banks. They're going to face a 9% capital increase requirement after the regulators agreed to sweeping changes of a proposed package of rules. Now, the dramatic retreat comes after the banks fiercely lobbied against the initial proposals of 19%. For more on the story, we have our managing editor for EMEA Finance, Tom Metcalf. So, Tom, this is quite a significant step back from the 19% to a much, much lower level. What does it mean for the banks? I mean, this is quite a U-turn. What does it mean for capital? What does it mean for dividends and buybacks, probably? This goes through my head, first of all, this morning.
Of course it is, Manus. Yeah, no, it's a pretty good result for the banks just on the face of it, right? 19% down to 9% or so. And, obviously everything's still up for grabs. But I think just the fact, wow, that's a complete halving of the initial proposal. That shows, A, how strongly the banks were lobbying, and B, just, the shift in tides on all these things as well. So I think you're dead on, what does this mean longer term? Better news for the size of buybacks and, dividends perhaps. But I actually think there's still probably a way to go before the final sort of outline of this comes through, because I'm sure the banks, while they'll be celebrating, might also be going, well, if we manage to get halfway, maybe if we can stick together on this, continue lobbying, is there sort of more kind of, sort of more softening to come?
Interesting. Well, for Goldman, they have other things to deal with. And Solomon was at the Barclays conference yesterday talking about a 10% drop from the prior years, what they expect in the bank's trading unit. Tom, I thought this was supposed to be a period of volatility and riches and everyone for trading. Is it just the wrong kind of volatility?
Yeah, it's a bit of a muted tone, right? I mean, analysts were expecting, Goldman's traders to drop about 7%. So, this is in the third quarter. So 10% is just showing, hey, it's even worse than they were thinking. I think one of the things we should remember is the prior period that they're comparing to was very strong, and that's what Solomon was really hitting. But yeah, no, there is a sense that, sort of the fat years might well be behind them, or the fat quarters, I suppose. And it'll be really interesting this third quarter, actually. And you've got more executives coming through this Barclays conference. So I'm very curious to see if that's sort of the general tone that sort of flows out of that meeting.
We look forward to your coverage of it. Tom, thanks so much. Bloomberg's Tom Metcalf. From banks to tech, Apple and Google have lost their cases in the European Union's top court. It puts them on the hook for billions of euros in fines. Let's get back to Matt Bloxham of Bloomberg Intelligence. Matt, great to catch up with you again. What is the big takeaway from this? We know the EU has been more tough on tech rulings and things like antitrust. What does this turn do?
Yeah, I mean, so we have to remember that these cases kind of go back 7 or 8 years, and so these are almost like a kind of precursor to the much more kind of significant regulatory action we've seen from the EU against big tech in the last couple of years, notably through the Digital Markets Act, which has really tried to kind of identify these companies as gatekeepers and put into legislation much clearer do's and don'ts about what they're allowed to do, and particularly the kind of Google case, which is about them kind of favouring their own shopping platform, really plays to the heart of that. So I think, you know, it's been a long time to kind of get these cases finally over the line. I think that's not been good for you know, business or the EU in terms of kind of policing the industry, and so I think the evolution towards the Digital Markets Act is aimed to kind of set out the rules of the road much more clearly, and to give the European Commission the kind of tools to effectively police the industry in an effective and in a quicker way, so that you can kind of bring issues to bear much more quickly and move on and change behaviour much more quickly.
Again, it just sort of divides the landscape between the innovation of the US and the regulation in the EU, and what happens next with AI. Matt, thank you very much. Covering the details there. Matt Bloxham on the technology stories this morning. Context Matters on Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
We're just 8 weeks away from the US presidential election. The former President Trump and Vice President Harris are gearing up for the first debate in Philadelphia tonight. The state of Pennsylvania is a crucial swing state for the candidates, and it's our first episode of the election brief. We dig into the deeper issues that matter the most in the Keystone State, and one of those is voter turnout, fracking, and the economy. Joining us now from Washington is our Bloomberg Real Economy reporter, Mark Niket. Mark, the road to the White House, we understand, it's very clear. Without Pennsylvania, it's virtually impossible. In terms of what they've got to do in Pennsylvania, it is about the voter turnout, and it's specifically around some of the bigger cities in the state, isn't it?
Right. If you're a Democrat and you want to win Pennsylvania, you need to have a big voter turnout in Philadelphia and the suburban counties surrounding Philadelphia, and in Allegheny County, which is Pittsburgh. Joe Biden got about 30% of his vote out of those two counties alone, because the rest of the state, for the large part, is Republican. There's huge swaths of Pennsylvania, the center of Pennsylvania, and areas around the urban centers that are just solidly Republican. So it becomes a question of math, and can Democrats get enough votes out of the urban areas to overcome the Republican votes that are going to be cast for Trump in the rest of the state?
That's the math. What about what they need to say to make that math reality? We're going to hear from both the candidates tonight in the first and likely, at the moment, the only debate between the two of them, between Harris and Trump. What is the language and type of policy that targets Pennsylvania specifically?
A lot of it's going to be on the economy, frankly. The economy, like in a lot of states, swing states, is the top issues. Polls say voters believe the economy is going to decide the election. And in Pennsylvania, fracking is a particularly important economic issue because Pennsylvania is the second leading producer of natural gas in the country besides Texas. And fracking played an important role in the presidential primaries in 2020 when Kamala Harris was running for president. She flat out declared that she would ban fracking if she were elected because this was a Democratic primary, and the liberal position on fracking was to ban it at that point. Well, fast forward to 2024, now that Kamala Harris is the nominee, replacing Joe Biden on the ticket, she's saying she does not support banning fracking. And fracking is a huge issue, like I said, in Pennsylvania because of the number of jobs and revenue that come into the Commonwealth because of fracking. And Donald Trump and Republicans have really tried to hit Kamala Harris on her past position on fracking, saying she would ban fracking, and essentially you can't trust her not to oppose fracking if she were elected.
Mark, one thing that we learned in the recent polls is the public want to know more about Harris. They know enough about Trump. What has she got to do this evening to convince those undecided voters that she is something perhaps different to Biden, because Trump still leads on the economic states? How does she differentiate herself to Biden?
I think she has to show competency, frankly. She's been vice president, but I think a lot of voters maybe don't know a lot about her, or certainly don't know as much about her as they did Biden and Trump. So, you know, this debate tonight gives her an opportunity to show that contrast with former President Trump and show that she's up for the job, frankly. I think a lot of people are going to be tuning in to hear not only what she says, but how she says it and how she appears. Does she appear presidential? And is she able to sort of, you know, put Trump in his place, as it were?
Okay, we'll see what tonight brings. That is Bloomberg's Mark Niquette. Thank you so much for that, Mark. Don't miss our special coverage of the debate that starts at 8 p.m. Eastern right here on Bloomberg. It's a blackout period for the Fed. We wait for CPI, so all we have, Manus, in the meantime is this debate to trade on.
I think it's pretty significant. You know, it's one of the only moments in time where you're going to see these two candidates on the same space at the same time. Even though the mics are down, that doesn't mean it can't get ruffled.
2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, you know, with lots of supporters, a really mind-blowing level of innovation against emissions. And, you know, in the last 9 years, that's gone better than I would have expected. So only now could you even, you know, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up very like this, the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. You know, in the meantime, some people who care about this issue are really out, you know, trying to think, do we need permitting reform? You know, do we find, what new ideas haven't we found yet? You know, how do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
I see the economy slowing, not stalling.
It looks to me as though the economy is going to be particularly strong this month.
We are landing in a different set of labor market conditions that is different from where we left.
If the economy is really slowing, we should see the inflation numbers continue to move lower, and we haven't.
The important story is that I think the economy is evolving in a way that the Fed may not be anticipating.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now, coming into Tuesday after snapping a 4-day losing streak on the S&P 500. Equities finding just a little bit more of a firmer footing. Equity futures right now look a little something like this, down by 0.08% on the S&P 500, softer by 0.25% on the NASDAQ 100. It is debate night in Philadelphia a little bit later on. We'll talk about the politics in the United States in just a moment. We need to talk about the politics in Europe. 2 headlines overnight. One on Apple, another on Google. Here's the one on Apple. Loses the EU top core fight over a 13 billion euro Irish tax bill. Google loses an EU court fight to overturn a 2.4 billion euro fine. Those stocks not doing much in the pre-market, but this very much is Europe against US tech.
Which has been going on for quite a while. The fact that that Vestager won this particular suit is compelling at a time where she's got a lot of pushback internally from Europe as well. The argument here is that essentially this is an unfair and sort of covert state subsidy, namely Ireland, how much Ireland has come into contact. But this is an example. Do first and apologize later, because a lot of those tech companies are staying in Ireland, and I think that that's the interesting aspect.
There's a lot of lessons to take from this. If you hear any more about potential court proceedings, antitrust violations in Europe, just remember this can take years to settle. This goes back to 2016, and back in 2016, Tim Cook called this total political crap. And here we are in 2024, and 13 billion euros to Apple now is a whole lot less than it was all those years ago.
Absolutely, and going back to 2016, you had Donald Trump coming out and saying Margaret Vestager hated U.S. companies. I actually asked her about that, Jonathan, in April, and she said, I never actually met Trump, and I have a lot of respect for U.S. companies. What's interesting to me is the Google part of this, because they're using a precedent that existed already to sue Google for this, but now they have the Digital Markets Act. She has cemented this anti-competitive legacy in the European Union, and the EU now has even more tools to go after big tech.
So wouldn't it be great to have this wonderful, in-depth discussion, sophisticated conversation about policy on a debate stage in Philadelphia at 9 p.m. Eastern Time when Harris and Trump face off with each other? We can talk about what's going to happen with Khan at the FTC. We can talk about what's going to happen with all these antitrust issues, Bramo. The stage is set for a real in-depth conversation later on.
Yeah, I'm looking forward to it. Let's just leave it there.
It's not what we're going to get, is it?
Honestly, obviously, we're not going to get that. It's going to be about tone. It's going to be about basically seeming presidential. It's going to be about who is Kamala Harris after all, and can Donald Trump keep himself together and kind of present himself with a policy focus? No one's going to actually talk about those policies. And oh yeah, by the way, as we've been talking about, even if they do talk about policy, we'll be talking about whether or not they're actually going to implement that, or whether that's sort of setting vibes to a certain constituent in order to get elected.
It's definitely going to be about style, not about substance, but it is an important debate. And I go back to the New York Times Siena College poll over the weekend, and what stood out to me was under the hood. 28% of likely voters said they need to know more about Harris. Only 9% more said they need to know about Trump. People want to get to know who she is. Governor Josh Shapiro said this to me as well. There's propensity in Pennsylvania. People come up to him. There's curiosity. What does she stand for? And she has a moment tonight to do that. And it's important because she only sat for one interview. And at the moment, this is the only debate that these two will face off.
Well, given the fact she's only sat for one interview, what's the strategy here? Is she hoping people don't find out?
Well, the strategy here is that she style over substance. This is why the Kamala Harris camp really wanted the mics unmuted. That moment for her to try to goad Trump into a combative face-off. Remember, that worked in her favor against Vice President Mike Pence during that debate where she said, "I'm speaking." And that resonated especially with a lot of women. She's not going to be able to have that moment with the mics muted.
Will there or will there not be a fly? That is what everyone wants to know.
Is that like the one thing you want to know?
Look, I think that a lot of people are expecting her to talk about the economic policies, emphasizing the middle class. People are looking at abortion and how Trump is going to handle that. People are going to look at immigration, how she handles and foists that, and also how much distance she really puts between herself and the Biden camp, given the fact that she was part of it and yet is trying to have a unique voice.
The main stage, 9 p.m. Eastern Time. Later on this evening, look out for that. Equity futures right now, positive to negative. We're down by about 0.04% on the S&P 500. Let's just call this one unchanged. In the bond market, not doing much either. 370.60, sort of stable going into CPI tomorrow morning, Lisa, and then PPI after that.
There's been a reset as people ratchet down some of the expectations for a 50 basis point rate cut. We're doing cuts now. What I think is interesting is that Atlanta Fed GDP now, their recent update actually was upgraded after the recent jobs report to 2.6%. In the third quarter. You see a similar type of read from the New York Fed. Point being, people who are saying that the sky is falling and that we're in a deep recession and you know, things are falling apart, just are getting reality checks. It's very difficult to say that. And yet, looking forward, there still is quite a bit of uncertainty.
It is conference season, and there's been a range of commentary coming from a range of banks on Wall Street. The one that stuck out for me yesterday was the Citi CFO, talking about the nature of spend evolving. It's going from discretionary to more staple type spend. Now, you can make the case that we're not falling off a cliff. I get it, if that's the case you're trying to make. But clearly the nature of spending is shifting, and it's been identified by a major bank here in the United States as just that.
And how people are spending, with what money, is also important, because we saw yesterday the fact that the consumer borrowing actually increased at the most since 2022. Why? Because people are spending by just saying, here's my credit card, and they're not necessarily paying them because you are seeing delinquencies go up. So there are a lot of signs that things are weakening that really are warnings. The question is, and we've been talking about this for the better part of 12 months now, normalization or something more pernicious.
Let's get into it. Here's the lineup this morning. Coming up, Peter Chair of Academy Securities saying stocks are still at risk of taking out August lows. We'll speak to Steve Paliuka of Bain Capital on the changing media landscape for sports, and Tom Forte of Maxim Group as Apple launches the iPhone 16 with the promise of AI. We begin with our top story. US stocks looking to rebound after snapping a 4-day losing streak ahead of tomorrow's CPI print. Peter Chair of Academy saying there is still risk ahead, writing, quote, I'm looking to take out the August lows. I really think there has been a major disconnect between people believing that we had capitulation versus having seen any actual capitulation. Pete joins us now for more. Pete, good morning to you.
Morning.
Taking out the August lows seems absolutely terrible. And then I look at the August lows on August 5th of about 5,100, about 8% south of where we are right now. It doesn't sound so bad. What was it about August 5th that you wouldn't describe as capitulation?
You know, I think a lot of people looked at the VIX at 65 at 8:30 in the morning. It was a calculation, right? No one actually traded VIX futures much above 40. So I think people really took comfort. Oh, we had this VIX hit 65, everything calmed down. There was never really panic in the futures market. There was never panic during the actual trading hours of the U.S. market. So I think people started reloading the boat and saying, oh, we're good. We've had this washout trade, had the capitulation. I don't think we've got that. And as we start nearing this, the NASDAQ 100 is already back close to those August lows. I think we push through this. We've got another maybe 10% downside. I don't think we get back to the March lows, but I think there is room for further downside.
You suggest there was no panic. I would suggest in Japan there was panic. The biggest one-day move since 87. At one point that morning, dollar yen had dropped down to about 140, 170. That was a 3% move. Are we suggesting for the global picture that was the tremor and not the earthquake?
Correct. I think really it's the U.S. market that matters, and the U.S., we watched what happened in Tokyo overnight. We got that little bit of panic in the morning. Futures were down, but it actually opened fairly stable, started turning around by the end of the day. Then the next day we rallied. It went probably further than I think we should have, but that was kind of obvious. But everyone just feels like, oh, we've washed out all the bad longs. This is all good. We can really rebuild from there. And I don't think we had that sort of a washout trade, and I don't think we can rally much further until we get that washout trade.
What's the catalyst for that 10% downside and for that washout of those longs?
You know, I think as usual, part of it's just going to be positioning. People have got them positions very long. People have been reloading in all sorts of vol selling strategies. You know, the one thing I keep watching is NVDL, which is a 2 times levered NVIDIA ETF. I don't understand why we have leveraged single stock ETFs. That make no sense to me. There's a huge drag on performance just the way they're set up, and yet that keeps getting inflows. And to me, until we see something kind of shake the faith of that trading crowd, that's when I think we kind of see the bottom, and it's not getting the inflows now, and we're having a lot more questions about AI. I think that's going to be the catalyst. Like, is the promise got ahead of itself?
So this is going to be led by big tech, from what you're saying, that you think that this is going to be an ongoing kind of deterioration from the beta trade that we saw earlier. I'm just wondering what the economic backdrop is for this, because some people might say overly bullish, overly complacent. You're saying the sky is falling and a recession is imminent. Is that the case?
No, I think I think the one thing we've now done is actually priced out the soft landing as guaranteed, right? So now I think there's at least some possibility of a harder landing. So I've been looking for a bumpy landing. I think you're going to see bits and pieces of data showing positives, negatives. It's going to be by industry. It's going to be regional. This to me is really again just about valuations. When I started on Wall Street, first trading day, they talked about options. They said, if you buy an option, it gives you the right to sell high, right to buy low. You get to trade the gamma. And like, what's everyone want to do? And like, we all raise our hand, buy options. And they're like, no, it depends on the price, right? Depending on the price, you want to sell those options because you're getting paid more than that. So I think that's where we've hit on a lot of these stocks. We've moved beyond what's rational in terms of what they can generate, and it's disappointing. And sadly, we talk about markets and these broad markets, but 50% of the indices are really just a handful of companies. So it really does matter what these 10 to 20 companies do.
Where's this concern about the election and politics play into your bumpy landing?
I'm kind of really confused. What are we even going to see tonight? Like, at this point, I haven't bothered spending any time really trying to figure out what either party's policies are going to be, because I don't think we've had any sort of definition. Where I've been working is what I think is going to stay the same, and that is really going to be, no matter who wins, this friction with China, this tech battle is going to continue. We are going to see more and more protectionism around AI, the semiconductor business. I think it goes back to one thing you were talking about earlier, Europe. Europe is not going to be good for AI. Europe's not going to be a good investment vehicle because it's all about constricting and constraint and rules and regulations. So I don't think that's going to be a hotbed of this. So I think ultimately the U.S. is going to do well, but we are going to see friction with China on that. And I think whoever wins is going to have to rebuild the U.S.'s reputation globally. Where do we stand with our enemies? And more importantly, where do we stand with our allies? Do we have 10, 20-year, 30-year commitments, or do we live election cycle to election cycle? So I don't think anything is going to come out tonight on that, but those are things I'm going to start looking for as we near the election.
A lot of people's base cases is gridlock in Washington, but some of the issues that Trump talks about, like tariffs, we spent a lot of time in this program talking about that, he could do unilaterally on day one. So have a massive impact on what's going on in China. Do you think China is basically waiting to find out what happens with the election because their economy is suffering before they really have some policy moves?
I think everyone's on hold a little bit. They want to see how this plays out. I think everyone has a decent understanding of what Trump does or doesn't do. He says a lot, and then he tends to back down. We're not sure what Kamala is going to do. I think people want to see what she's going to be like. And will she be easier to negotiate with, right? Will people prefer to negotiate with her, or will they prefer to stick to Trump? So right now, I'm kind of discounting everything both sides say. And that is probably, I think, one thing is we're all kind of assuming split tickets. If there's something that comes out that one side is really going to win completely, then I think that changes the narrative for Wall Street. Then we have to pay a lot closer attention to the risks.
Let's just park the politics just for a moment, just to wrap this up. When I walk away from listening to this conversation, Lisa correctly identified that you see tech and the AI trade as the biggest risk. A failure to demonstrate where this return on investment is going to come from. Was the Apple unveiling the beginning of that yesterday? Do you think it was?
You know, it did not seem to give that excitement, but you've seen some of the earnings come out. Oracle had great earnings last night. They're up, but yet the NASDAQ 100's down a little. Futures are down a little bit this morning. So I think it's taking more and more to get that story. The one positive thing I'll say that I keep an eye on is Walmart did come out and say that AI really helped them with their quarter and in their planning. So I need to see more of that to believe it. And right now, you know, what I'm seeing is a lot more people, I think, who've been struggling through using these LLMs or generative AI. They all keep coming back like, is it there yet? And since the cost, rose so quickly with the cost of chips, the cost of getting data centers, electricity, that I think the risk reward or the cost benefit's not there right now, and I think that's what we'll see some slowing down on.
Peter Cheer, looking to take out the August lows. Peter Cheer of Academy Securities. Peter, thank you. Appreciate it, sir. Equity futures slightly softer here. We're down 1/10% on the S&P. Let's get you an update on stories elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. The U.S. House of Representatives passed legislation last night to blacklist Chinese biotech companies and their U.S. subsidiaries. The bill's backers argue that the law addresses concerns over security. Those concerns, though, were denied by 2 Chinese biotech companies. They said that they don't pose a security risk to the U.S. or any nation for that matter. The bill now goes to the Senate. AstraZeneca shares falling in the London trade, down 4 1/3% over the past 2 days. It is their biggest one-day drop in 7 months. The British pharmaceutical giant announced disappointing results for its lung cancer drug trial. AstraZeneca said the drug did not significantly improve patients' overall survival results. And Catherine, Prince of Wales, said she is cancer-free after completing 9 months of chemotherapy. In a video statement released by Kensington Palace, Kate said she would resume duties, quote, as and when she is able, and that she is feeling well and looking to the future. The video, filmed in the woods of Norfolk last month, showed Kate on a day out with her 3 children and husband, Prince Williams. And that's your brief, John.
Danny, thank you. More from Danny in 30 minutes' time. Up next on the program, Harris and Trump facing off in Philadelphia.
In many ways, Donald Trump is an unserious man.
Lion, Kamala Harris, Lion, L-Y-I-N apostrophe.
I took on perpetrators of all kinds. I know Donald Trump's type.
I look forward to the debates because I think we have to set the record straight.
The debate coming up a little bit later from New York City this morning. Good morning.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Live from New York City this morning. Good morning. Welcome to the program. Equities just a little bit softer on the S&P 500, down by 0.2%. Yields unchanged on a 10-year, 370.41. Euro dollar right now, 110.36. A call from Morgan Stanley for this to head back to parity. We'll pick up on that call a little bit later this hour. Under surveillance this morning, Harris and Trump facing off.
In many ways, Donald Trump is an unserious man.
Lion, Kamala Harris, Lion, L-Y-I-N apostrophe.
He would use the immense powers of the presidency to serve the only client he has ever had, himself.
I think I'm entitled to personal attacks. I don't have a lot of respect for her.
I took on perpetrators of all kinds. I know Donald Trump's type.
I look forward to the debates because I think we have to set the record straight.
Donald Trump and Kamala Harris taking to the debate stage at 9 p.m. Eastern in Philadelphia for their one and only scheduled debate. The candidates agreeing to a 90-minute event with no live audience, no opening statements, and microphones muted when it's during the other's turn to speak. Evan Roth-Smith of Slingshot Strategies writing, Harris heads into Tuesday's debate still searching for a durable advantage in the states that will decide the election. But with important openings, she can press. Evan joined us now for more. Evan, good morning, sir.
Good morning.
Let's talk about the very specific, highly specific pre-debate polling that you've been conducting. Can you just walk us through it to begin?
Well, this election is increasingly becoming focused on the handful of voters, really only about 500,000 voters, who are going to decide the outcome, right? So these are swing voters, largely independents in 6 states, right? The 6 swing states in the Rust Belt and the Sun Belt that we all know about. And this debate is largely about them. What do they want to hear? What do they need to hear? And particularly, what does Kamala Harris need to tell them to get them over the edge and make this more than just a knife's edge election, where she's clawed back out of the hole that Joe Biden was in and reached basically parity with Donald Trump, where this election could go either way, as just about any analyst or pollster would tell you. And really what these swing voters in these swing states want to hear, at least in our polling that we just released this week, is they want to hear her continue to gain ground on the economy, to press her advantage on prices, right? Donald Trump still has a very narrow advantage, a 2-point advantage in overall in these swing states on inflation and jobs. But with independents in these swing states, Harris has a 4-point advantage. These are very close to margin of error, but it means these critical voters are looking to hear on the economy and hear on prices specifically. And she has to mitigate concerns on immigration, where she's still down in these swing states to Donald Trump.
Evan, when you look at the New York Times Siena poll over the weekend, more than 60% of likely voters said the next president should represent a major change from Biden. Do you see that in this polling group that you're going after in the swing states?
So it's interesting. We polled this with independent voters in swing states. Who represents change? Who represents the right kind of change? And voters in these swing states, independent voters, by 10 points say that Kamala Harris is a breath of fresh air. And she is. It's undeniable. She's a breath of fresh air in this race. But by only about 7 points do voters say that she's the right kind of change. She's still more or less tied with Donald Trump on being a change candidate. And that's because she hasn't yet broken in a meaningful way, rhetorical or policy-wise, with the administration. She isn't a change candidate beyond the literal change of who the candidate is. And now, that slight advantage on the right kind of change with independent swing state voters is very good, but she needs to do more. She can do more.
Does she need to completely break with Biden in your polling to win over those voters?
I don't know that it's a complete break with Biden. She doesn't need to. He's the sitting president. He's her sitting president, her running mate in 2020. There is some merit to the idea that she could draw greater distance, particularly on immigration. There's very little downside to drawing distance. But on policy, most of the Biden policy agenda, when it's not tied to Joe Biden, is very popular when you poll it. So how do you break with the president? You can't break with him on policy. You have to break with him in more subtle rhetorical ways. And we'll see what she does. We'll see how she manages that. And you also want to continue to be able to take credit for things that the administration does that is very popular, like Medicare negotiation of prescription drug prices, which is enormously popular, including in these swing states with these swing voters.
How engaged are some of the independents and prospective voters, those 500,000 people that are going to determine the election? I mean, how much are they watching every iteration, looking for policy, trying to understand the two candidates?
Well, that's really what's critical tonight, because those voters are looking to learn. A lot of people who follow politics closely journalists, practitioners, the kind of people who get up at 6 in the morning to watch the news and get a little edge on everyone else, we know a lot about what's going to come out of their mouths. These swing voters who haven't made up their mind, they're watching to learn. They're not necessarily watching for the repartee, the zingers, and that's why I discount the mics being on or off or anything like that. The voters who will determine this election really, really care about what these candidates are saying. They're looking for substance. They're looking to be educated. They have open questions, largely about Kamala Harris, very, very much less so about Donald Trump, and they want answers to those questions, particularly on the economy, particularly on her immigration policy and how she's going to be different than the status quo. And an important mission for Harris is also to raise the salience of abortion and reproductive rights in this election.
That's what I was going to say. How do you sort of pair those two ideas, the social versus the economic, especially at a time where, frankly, there isn't that much daylight when it comes to certain policies, particularly with China versus the U.S. and other international issues between Trump and Harris?
Well, on foreign policy, Harris is very fortunate in that the part of the Biden administration agenda and policy set that she is tied the least to is foreign policy. So she can kind of do it and say whatever she wants and feel she needs to do and is politically advantageous. It's also true that the vice president has had very little to do with American foreign policy over the last 4 years. Short of Dick Cheney, it's hard to find a vice president who has.
Evan, can we pick up on who she is? To independents, at least. Is this the person that ran back in 2019, 2020? Is she progressive in moderate clothing here in 2024? How do they see her?
She's not. I mean, when she ran in 2019, it was in a Democratic primary where she didn't even make it to Iowa. She never saw the voters. In 2020, she's a vice president on a presidential ticket. And also, it should be noted, in a year where campaigning was different than any other presidential election in our lifetime, right? She wasn't barnstorming the swing states. Media consumption was very different during COVID. And so she is very much doing her first introduction to voters. We're now a couple months into that introduction, so things are starting to firm up. But this is, we did this test on what policies, what campaign promises that Harris has made do you believe she will try and succeed on, try and fail, and not even try, right? So these are all policies that the campaign has promised to pursue. And on some things, like the child tax credit, voters really believe she will try and get it done. On other things like deficit reduction, she's underwater by a couple points, right?
She's not the only one.
She's not the only one. She's not the only one. I mean, where's the candidate who hasn't promised some form of deficit reduction? But so there's still elements of her record, and the border, by the way, her promises to following up, trying to get the bipartisan border deal done. Voters more or less buy that from her. Surging resources to the border, which is a popular idea that her campaign has promised to do, more border agents. Voters aren't quite sure that she means that promise. So there's reassuring to do. It's less about new promises. It's more about affirming that the things she has promised to voters are real and something she will try.
It's something you imagine the former president will be pushing on pretty hard a little bit later on this evening.
I think they're all just going to be watching the $58 billion auction at 1 p.m.
Is that right?
Yeah, because they're all very focused.
Fixated on deficit reduction.
Make deficits great again.
Evan, thank you, sir. It's good to see you. Let's do it again soon. Evan Roth-Smith there of Slingshot Strategies. Coming up next on this program, Steve Paliuka of Bain Capital, the co-owner of the Boston Celtics. That's just around the corner from New York. This is Bloomberg.
are many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Live from New York City, welcome to the program. Let's kick things off with the scores in the equity market on the S&P 500. Slightly negative, we're down by 0.05% in yesterday's session, snapping a 4-day losing streak. A day of gains with quite a cyclical tilt. The financials doing okay. Energy doing okay, discretionary doing okay. We'll talk about consumer discretionary a lot more throughout this morning. That's the equity board. Let's switch things up and get to the bond market. Two-year yields at the front end of the curve, up again by, let's call it a single basis point, still sub 370 at 368.52 on a 10-year 371.17. Big focus on US monetary policy and what it could mean for the US dollar. I think we have to talk a whole lot more about the other side of the trade, so let's do that now. Switch up the board, turn a page and get to this story. Euro dollar. Euro dollar right now, 110.37. Morgan Stanley speaking to the team here at Bloomberg. This is David Adams out of London who runs G10 FX Strategy, suggesting that we could drop back towards parity. Here's the quote. There is plenty of scope for the market to refocus on the fact that the ECB could be cutting deeper, Lisa, and faster than what is currently priced.
They're basically calling for a 7% roughly devaluation, depreciation from current levels for the euro at a time where we're expecting a 25 basis point cut from the ECB on Thursday. But then after that, how much more scope do they have to cut simply because growth is not in any way, shape, or form presenting a challenge to them on that level? We've talked about this. People think that the Fed is going to cut more than the ECB. Really? Let's see.
Look at Germany and the data coming out of Germany and compared the data to coming out of the United States. Very, very different pictures. Germany's doing terribly. We're still talking about normalization and not weak in America. And in Germany, we're talking about nothing but weak.
This is the problem. And this is the reason why the ECB may have more scope to cut, especially because they're not seeing the credit demand either. And that's sort of a big challenge. How do you create that credit creation, credit demand at a time where people don't see the optimism going forward? There was a recent EU adjustment to the tariffs. Did you see this overnight? Where they lowered the tariffs for incoming Chinese cars. They're sort of caught between a rock and a hard place right now in terms of how do you get products that bring down inflation and that are cheaper and that actually feed the sort of green revolution, while also not decimating the likes of Germany and their auto manufacturers. And it's a very awkward dance that is not leaving people with confidence.
The euro just about unchanged against the dollar right now. Euro dollar 110.35. Under surveillance this morning, US regulators agreeing to a plan requiring a 9% increase in capital requirements for the biggest US banks. That marks a dramatic retreat from the original proposal that had called for a 19% jump. Fed Vice Chair for Supervision Michael Barr expected to preview the changes in a speech later on today. This versus what it was is a major win for some of the financial institutions across this country.
It said that this sort of resolution to the problems that we saw in the banking sector was completely the wrong way to go and would just weaken them further. So it's a win for them. It's also notable. I do have to point this out. Jay Powell really wanted to seek consensus. And so he was looking for a way to seek consensus. that kind of rhymes with other things that we hear about him seeking consensus. It's sort of interesting to me that you're seeing it in multifaceted ways.
This has really been a bitter fight in Washington. Lobbyists coming out that represent the banks really trying to lower this. But Jay Powell kind of teed this up when he was talking to Congress earlier in the summer, saying there would be broad changes. It's not going to be at this top level. I'm waiting for the Elizabeth Warren tweet to drop, because just a few weeks ago, she was telling the Fed they need to shore this up, and she was looking at nothing under 16%. So this is going to be a political rallying cry for those in the progressive left.
I think we can guess what the draft already looks like in the unposted tweets over at the Senator Warren account, can't we?
Yeah, and we can also imagine that if Trump gets back into office, he'll probably unwind this and it will never see the light of day. And so you sort of see both sides of the issue coming to the fore.
Let's turn to tech. Apple losing its core fight over a $14 billion Irish tax bill as the EU cracks down on special deals for big companies. The EU's Court of Justice in Luxembourg backing a landmark 2016 decision that Ireland broke state aid law by giving the iPhone maker an unfair advantage. That stock is negative by a little more than 1%. I want to turn to the latest out of China. A deepening sell-off in Chinese stocks is worsening a crisis of confidence in the nation's economy. The CSI 300 index is near the lowest level since January 2019, with Chinese equities trailing global ones for the fourth consecutive year. And the latest data out of China, not pretty. Import numbers out of China, basically flat, dead flat, almost unchanged.
And this is really the fear of deflation and some sort of deflationary spiral, especially with the stock market rout that you've seen so far. My question is, does this really push Xi Jinping to actually increase state aid? We haven't seen it yet. Or does it sort of focus more on the nationalism tilt that we've heard? How do you get people to feel like it's a point of national pride to buy your own products and sort of move to some of these other initiatives? In other words, does this make it more dangerous or less dangerous for China versus some of its adversaries and stiff competitive counterparts?
And more or less dangerous for the likes of Apple as well, which we'll return to a little bit later on this morning. The latest on DirecTV and Disney still struggling to reach a deal. Millions of subscribers were blacked out of ESPN's Monday Night Football featuring the New York Jets and San Francisco 49ers. The dispute highlighting the shifting power balance in sports and TV. Steve Baliuca of Bain Capital and co-owner of the Boston Celtics and Atalanta Football Club joined us now for more. Steve, it's good to see you, sir. Thanks for joining us. Thank you for being here. Let's talk about this standoff. What do you make of this current standoff at the moment between DirecTV and Disney?
Well, this is in a long series of kind of the war in media right now, the old media versus the new media, and distributors versus content providers. And we've seen this before. I was involved directly with the Weather Channel that had a big battle, long fought battle with DirecTV as well. And, content providers want the appropriate money for their content, but the distributors are between a rock and a hard place because they're distributors, they don't have content, and they want to maximize the price they can get. So that's what you're seeing now.
What do you think the future of sports distribution is, which is a highly broad question, I know, but what do you think the future is?
Well, I think the future is good because sports is the most watched programs. I think 93 of the top 100 programs in the USA last year were sports events, and so you have to have sports events if you're a distributor to get eyeballs.
Do you see a future where they skip the traditional distributors and these sports franchises just stream directly themselves? Is that the direction of travel for you, or is that too complicated?
Well, it's a great question. It's going to be a battle between convenience and bundling, versus trying to get a la carte anything that you want to watch. So we'll have to watch that over the next 10 years. The good news is that the content providers like the NBA are in good shape no matter which way it goes because content, as I think Eisner said a long time ago, content is king.
Well, just to sort of push that a little further, there's this issue, and I see this with my sons as they digest sports, and they have access to some and not access to others. And do you rather have a generation that is brought up with easily accessible sports and being able to tune in and the popularity increases, or would you rather higher fees from specific streaming sites?
Well, that's the balancing act, and I think you want both because you obviously won't have new fans unless you have broader distribution. If the charges are high, you're going to really, shut off your fan universe to the fanatic fans. So you're seeing many deals now where people go on air TV, plus a distribution channel. So it's kind of like the movies promote things going, onto cable or going onto satellite. And so you're going to have a balance of both.
The international sports scene. I guess that there's a question about the U.S. and how sort of isolated it is. We've seen an increasing sort of internationalization with respect to soccer or football, with respect to basketball, or with respect to even baseball. How much do you see that continuing, even with some of the direct streaming, et cetera, some of the new agreements that are coming out?
Well, direct streaming is actually going to increase that because now you can access any sports from anywhere at any time. And if you think about, the NBA audience, the global sports like football and basketball, huge international market. Things are blending together. I think 30% of the players in the NBA are from foreign markets, and people want to see those players. So we're only the tip of the iceberg, and that's going to grow dramatically over the next 20 years.
Could we see more sports teams do what the Yankees did, say with the Yes Network?
That will help defend, creating kind of regional ESPNs. So that's a compelling reason. If, for example, you're in New York and you want to see all the New York teams, that's probably a defensible moat that you can have a cable business. But not having that and people being able to go direct is a real problem.
So how hard is that if you're not, say, the Yankees or the Boston Celtics? If you're the smaller team trying to break in?
Yeah, it's a little more difficult, but on the other side of it, the smaller teams have really profited by the fact you have so much social media and clips and accessibility. So it used to be a star, you'd have to be in New York or Boston or LA. You can be a star anywhere right now because people can talk with you directly, see or market yourself, see the small team. So the small teams are actually on the rise.
You've got a footprint into major markets. You've got a footprint over in Europe, in European football, and here in the NBA, here in America. How different are things in the European market versus, say, the US one when it comes to sports TV distribution?
There's some similarities, but they're different in the fact that you have different countries, you have leagues coming together, and certainly in football it's very confusing. It's hard to understand in America that you're playing in kind of 3 different leagues at the same time. You've got your Italian national team players that leave your team for a while and go to that team. You have the Champions League, the Europa League, and then you have each nation is a league of its own. So you have to be a very facile fan to understand what you're playing for and these different cups and things. And the U.S. is much simple. The league is very simple. You're going for a championship, and that's it. There's one championship. In Europe, there's championship cups and Europa Cups and all sorts of things.
The Europeans might say that's a feature and not a bug. It's part of the beauty of European football.
I think it is. And look, the NBA has really learned from that. And we have the in-season tournament, and many people were skeptics. Adam Silver was very courageous in pushing that through. That had amazing ratings last year. The games would be like late.
People think it's a bug and not a feature, given that it might actually prevent them from being able to really unlock franchise value. One thing that I've noticed, without a doubt, football is the biggest sport on the planet. But when you get a list of the biggest franchises by value, top 10, it is dominated by American sports teams. Why are Americans and American sports teams so much better at unlocking franchise value versus their European counterparts?
Well, that's a great question, John, and I think Europe's got to start to go more towards the American model. The American model basically has a very strong central control of the league, so the league can negotiate the television deals. It's all unified. You can have a unified cost structure. It's been much more difficult. Soccer kind of grew up from the minor leagues to the major leagues. It's a very different system, and so you have a hard time unifying it because it's in different countries. So that's the advantage of being in a large footprint like the United States, where there's one approach, and you can have a strong commissioner and really smart commissioner like Adam Silver really map out how do we get the product to most people at the most effective cost to get the most eyeballs on it. In Europe, it's very fragmented right now.
What would private equity bring to the U.S. sphere? Particularly, I'm talking about football, the idea of private equity investment. There are many now that are looking at it now that the potential for a 10% ownership is available.
Well, I think it's a misnomer to call it private equity, classic private equity, because private equity really comes in, buys a company, tries to grow a company, build a strategic plan, globalize a company. A 10% investment in an NBA team is more like investing in gold, or maybe not Bitcoin because it's volatile, but it's more like gold. Its value has never gone down in the last 25 years. It's been a double-digit returner for 25 years. So specific funds will be raised and are raised. Funds like Arctos and Dial, they are raised to be put into these clubs. And if someone wants a safe investment and to participate in the NBA in their own way, they can go to these funds. but that's not really classic private equity. So the stir in the newspapers of private equity is taking over football teams, it's going to call the plays. That's not happening. It's a 10% passive stake in what is a fantastic asset. You know, the NFL has, again, grown for 25 years, all the values, and it allows people to invest. It's non-correlated to the market. So that's how it's sold. It's really specific sports-related media funds.
How fantastic are these investments if we were to see a 28% capital gains tax?
Well, that's going to apply to everything, so it's all on a relative basis. So on a relative basis, it'll be the same. You know, I think inevitably taxes will go up given the deficits that we have, and probably should go up, and hopefully do it in a thoughtful way so it doesn't, you know, kill the economy.
What is a thoughtful way as a businessman?
Well, if you look at nations that have a total tax that's the same on capital gains as it is on ordinary income, you'll find that they rank much lower in terms of venture capital, you know, business formation. The United States is #1 in that, and it has contributed to the fact that, you know, if you invest in venture capital and you go for the long term and you have capital gains, a whole industry has been created around that. Europe's behind in that, China's behind in that, and it's not perfect, but some asymmetry between those rates helps that industry grow and then helps companies grow.
Do you see some contradictions in the Democratic platform, that they seem to want to foster startup culture, and at the same time there is this constant, and I would say constant, effort to think of the best way to tax unrealized gains? Is that a high contradiction from your standpoint?
Well, you know, I think, as you guys know, John, I think I see contradictions in politics on all sides. And I think we're in a very rough period right now. We're in a very rough period where things have become polarized. You know, populism has taken over. And I hope we'll get back to some rationality where both sides can sit down and say, okay, what is a relevant tax policy that we can fill the deficit but not kill the economy? And let's compromise and get something in the middle. And hopefully that's where we're going.
Then we all share that hope. Steve, it's good to see you. Thanks for sharing your thoughts this morning. Thank you, sir. Steve Pagliuca of Bain Capital. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. It's Danny Berger. Hey, Danny.
Hey, John. Google lost its bid to throw out a $2.6 billion EU fine for abusing its monopoly power to crush rival shopping services. The EU's top court backed a landmark 2017 decision, which found that Google illegally gave its own product listings higher dominance in search results. In a separate ruling, the same court found against Apple and a $14.5 billion Irish tax bill. Oracle shares surged during pre-market, up 8.5%. It reported better than expected quarterly profit. AI demand is still supporting its cloud unit. CEO Safra Catz says cloud services have become Oracle's largest business. Quarterly revenue rose by 7% to $13.3 billion. Award-winning actor James Earl Jones has died. He was widely known as the iconic voice of Darth Vader from Star Wars and Mustafa from The Lion King. He also starred in Field of Dreams. He overcame racial prejudice and a stutter on his way to winning 2 Emmys, a Golden Globe, 2 Tony Awards, a Grammy, and an honorary Oscar. James Earl Jones was 93. That's your Bloomberg Brief. John.
Hey, Danny, thank you. Huge loss for the industry. More from Danny in about 30 minutes' time. Up next on the program, Apple diving in to AI.
We are thrilled to introduce the first iPhones designed from the ground up for Apple Intelligence and its breakthrough capabilities.
A conversation up next, live from New York. You're watching Bloomberg TV.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Live from New York City, equities totally unchanged on the S&P 500. In the bond market, yields just a touch higher, up a basis point, 371.17. Look out below for crude. We're down another 0.9%, $68 and about 12 cents. Under surveillance this morning, Apple diving into AI.
We are thrilled to introduce the first iPhones designed from the ground up for Apple Intelligence and its breakthrough capabilities. The innovation and invention these products deliver will continue to deepen the meaningful impact they have on all of our lives. I'm proud of our teams and what they've accomplished, and I can't wait for you to experience these amazing products.
Here's the latest. Apple unveiling its latest products alongside its not-quite-ready suite of AI tools called Apple Intelligence. The tech giant also being down a blow in the EU, losing a multi-billion-dollar court fight. Tom Forte covers Apple for Maxim Group. He has a hold rating and 203 price target on the stock. Tom joins us now for more. Tom, big step back. Talked about this a few times in the last 24 hours. How unusual was this event compared to events of yesteryear? The fact that we launched a product and promoted features that don't really exist yet.
It's incredibly unusual. So I think that's the big challenge, and that's what could slow near-term sales 3 months, 6 months, because they're saying to the consumer, buy the hardware now and wait for the best feature, wait for the software. It'll be in beta next month, and then for many consumers, you'll get it next year. So I think it's a difficult proposition for Apple.
Tom, talk to me about the upgrade cycle. If Dan Ives of Wedbush was alongside you, and we still need to make that happen, Dan would say we're about to see an upgrading super cycle to tap into a lot of people with old iPhones. Are you doubtful?
All right, so Jonathan, I did some analysis on that, and I looked at the 5G upgrade cycle and compared it to the AI upgrade cycle. I think you're going to see about half of the lift you saw from the 5G. And the reason I say half, not whole, is consumers weren't waiting for AI phones. If you look at 5G, iPhone sales were negative. There was pent-up demand. And I think you also have this challenge from a regulatory standpoint. 25% of revenue comes from Europe, and the EU rules are going to make it difficult for Apple to roll out Apple Intelligence there. 19% of sales come from China, and China regulations will make it difficult there. So I think it's an upgrade cycle, but I think it's half of what you saw with 5G.
There's a lot to unpack there, in particular the AI aspects versus the new features aspects and how they overlap and how they don't. What I thought was interesting was the Apple Watch detecting sleep apnea and AirPods as hearing aids, because guess what? They catered to the older crowd that actually probably thought, I'm just maybe speaking for myself, wow, that's interesting. Hold on a second, maybe it's relevant. I mean, does that highlight where some of the advancements are taking place and how they don't necessarily fall in the AI sphere?
I thought, to your point, Lisa, that the AirPod Pro as a hearing aid was an excellent move by Apple. The challenge for Apple is wearable devices are about 10% of revenue. So let's say that they generated incremental $1 billion in AirPod Pro sales because of this hearing aid feature. That's not really a needle mover for Apple. Half of sales come from iPhones. It's still all about the iPhone right now. But as an individual feature, I thought the hearing aid was great offer by Apple.
Meanwhile, there's this question about how much people are going to look for a personal assistant or something that is from the Apple Intelligence sphere, and whether this new phone will really give them that sort of impetus. Is there a larger story here? And this goes to what Peter Scheer was talking about earlier, that we're seeing the hints of what AI can deliver, and we're unimpressed.
If we gauge AI on Alexa and Siri, we're tremendously unimpressed. If we gauge AI, though, on other things, how Amazon for years has said, if you bought the Isaacson book on Musk, that's on my bookshelf up there, you might be interested in these other books, then AI has actually been quite effective for an extended period of time. But yes, when it comes to personal assistants, Alexa and Siri are not exactly great poster children for artificial intelligence assistants.
Tom, if they can't break into the EU and China with this new AI, Apple Intelligence, they're rolling it out in a half-baked way. Why are they doing it now? Why not just wait 6 months or a year?
I think they have to. And I think the other thing that was interesting yesterday, or technically this morning in Beijing or this afternoon, was Huawei introducing a trifold phone. And I think foldable phones are kind of the next big thing for Apple, but it looks like that may not happen until late next year or the year after that. But I think when it comes to artificial intelligence, this is a great product and a great selling point for Apple. It's just unfortunate that the software won't be available when the hardware is available.
You mentioned Huawei, so I want to pick up on that point. If Apple, with this new Apple Intelligence, when these AI features cannot break into China, and Huawei's already coming out with something you say Apple might have 2-3 years down the road, how hard is this market going to get for Apple to infiltrate?
The good news there is historically, this is what Apple's been able to do time and time again. Not be the first, but be the best. You saw that in smartphones. I think you'll ultimately see that in the flip iPhone or whatever you want to call it. But yes, it is concerning that on a near-term basis, in an important market for Apple, again, 19% of revenue, Huawei is building an early lead in foldables, which are gaining traction with consumers.
Apple has me stuck in their ecosystem. Apart from that, Tom, what are they the best at right now?
What is Apple the best at? Apple's the best at making something work. So I think that artificial intelligence, Apple Intelligence, it will be something that consumers will enjoy. It'll be a flavor of artificial intelligence for consumers. Apple's best at that. They're best at making something easy to use. And I think that we'll see that. We're just going to have to wait to see that.
Okay. Tom, thank you, sir. Tom Forte there of Maxim Group. Tom, appreciate it. As always, still need to make that Tom Forte, Dan Ives matchup happen at some point. I think Anne-Marie nailed it. For the Chinese market right now, Huawei is innovating hardware still. Feels like Apple is done on that front, at least when it comes to the handset, when it comes to the iPhone. They're innovating software. But that innovation, you're going to have to be patient. You're going to have to wait for it. Are bigger screens, better battery life, and new colors going to cut it in the Chinese market for the next couple of quarters until we see that innovation actually come to market?
You know, this is going to be the key question in addition to a whole other host of issues in China, which we're seeing in other industries as well. I will say Apple is very good at waiting and then perfecting the execution of something. So this isn't the first time that they've done that. And foldable phones, very debatable in the households last night.
How did that go?
It was a really heated debate. Some focus on the hinges, the hinge quality, what happens when the hinges break.
Okay.
What also, do you really want to like unfold your phone when you get a phone call or when you get a text? And there
That's
was
what we used to do.
Well, right, but
Sort
do we really want to go
slide
back?
it and unfold it.
Or do we want to go forward?
I want to go forward to the next era of Bloomberg Surveillance. And here's the lineup. Wei Li of BlackRock, Tom McLaughlin of UBS, Gene Soroka, Executive Director of the Port of Los Angeles, and a whole lot more from New York City. With futures slightly negative, this is Bloomberg.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
I think the market's overreacting right now.
I think the challenge is it's overreacting to single points or news.
You don't want to get defensive now. It's a wrong time.
Uncertainty is a factor here.
We're still pricing in very much a soft landing.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. Bloomberg Surveillance, second hour, starts right now with equity futures negative by 0.1% on the S&P 500, just a little bit softer going into the big one later on this evening at 9 p.m. Eastern Time. Debate night in Philadelphia for the one and maybe only time. Harris facing off with Trump in Pennsylvania.
Last time we got a debate from the presidential candidates, it was rather consequential. So there could be a lot of potential fireworks that come out of this, given the fact there are a lot of questions around Kamala Harris. And frankly, we have not seen these two pitted against each other. And this is a very different race and a very new race, just less than 2 months ahead of the election.
And what we heard from Evan Roth-Smith, though, is that tonight's going to be critical for really just 500,000 people. That's who each one of these individuals wants to reach. Those in the swing states that have yet to make up their mind. And he says what they're yearning for, especially for Kamala Harris, given this is her first presidential debate, not Donald Trump's. He's had multiple of these. They want to know more about policy. Over the weekend, we actually did get the policy proposals from her team on the website come up. She's leading on the economy.
We finally have that tab now.
We finally have that tab. And she's leaning in hard on the economy. And given the fact that this is going to be in Pennsylvania, this is really going to be the number one focus.
It took a while to get that tab. This is one not just for this country. This is a debate for the whole world, including this country, China. China very much in focus right now, and I think we have to keep going back to the difficulties in that economy. I know we're all obsessed about what the Fed may or may not do on September 18th for good reason. It's consequential. But in China at the moment, we've got equities near a 5-year low. We've got the economy in what many are describing as a deflationary spiral. We've had import data overnight that shows imports totally subdued. And if you're a European manufacturer or a global manufacturer trying to sell into China right now, you're facing some really soft demand.
Yeah, and this is a real problem for Europe in particular, which is the reason why you're seeing a greater degree of weakness, and that Morgan Stanley call about potentially parity on the euro by the end of this year. BMW coming out this morning and talking about how it was cutting its forecast for the year. Yes, there was a faulty component, but hey, guess what? China, very muted demand, and that is one of the biggest markets for them. Look, this is going to be an ongoing question. How much is China isolated from the Western world? You know, a lot of people say from the U.S. a lot more. From Europe, not so much. And you take a look at some of the trade tensions, you wonder who's going to be allies with whom in a very different economic landscape going forward.
In a world of fence sitters for the last 10 years, well, you have to pick a side. Lisa pointing out the difficulties over at BMW. We were talking about a new iPhone coming to market in the last 24 hours. There's going to be a big challenge in China as well to sell that phone.
Oh, absolutely. Given the fact that what you've seen from every other consumer brand in China is they're actually lowering prices to try to get consumers out to buy all of these goods. Another interesting thing, when we talk about the election, we talk about what's going on in the Chinese market, I still go back to that Goldman note, Jonathan, you brought up a number of times. Goldman is saying that China is waiting on the sidelines potentially for fiscal hose to use in the economy to really try to drum up some of the economic, the drag on the economy because of the election. Because they don't know who they're going to get and how bad potentially the policy may be, say when it comes to 60% tariff wall on China.
When you tie this together, you kind of get Peter Scheer's point of view, which is how much are you paying attention to? I'm looking at what's not going to change to try to advise clients because, frankly, they just don't know much. But you think about that from a corporate executive standpoint. And I keep going back to a number of conversations I've had recently with executives where I ask them, what's your biggest question? Number one question, tariffs, because they don't know what's going to happen with that. Number two question, they never mention China. They say that they're expanding in China, but a big question of whether that's feasible given this dynamic. To me, this just all highlights that it is very important. The debate is not going to exactly cut it in terms of giving clarity to any of these issues, which are quite complicated and not necessarily going to be prescriptive.
We'd love some clarity, and we'll all tune in to hope that we get some anyway. If you are just tuning into this program, welcome to this program. Equity futures right now on the S&P 500, just about unchanged, flat and going nowhere. A welcome treat given the downdraft we saw through last week. In the bond market, yields higher by a basis point or two, the 10-year 371.92. And look out below on crude. Here we go again. The sell-off resumes. It's a break of 68, Lisa, 67.99 on WTI.
Even with Hurricane Francine barreling down in the Gulf and this question of whether that could disrupt some of the production, this to me is really one of the red flags people are looking at. And you can see this correlation between oil, between crude and longer term yields, which actually hit their lowest level in the U.S. going back to 2023. There's a feeling this is as much a demand story as a supply story at a time where you're not seeing increases in production from either Saudi Arabia, OPEC Plus, or even some of the crude producers in the United States.
71.20 on Brent crude. Coming up this hour, we'll catch up with Wei Li of BlackRock, staying long AI, Tom McLaughlin of UBS ahead of the first and only scheduled debate between Harris and Trump, and Gene Soroka of the Port of Los Angeles on a summer boom in imports. We begin with our top story. Apple struggling to inspire confidence in its new phone with not quite ready AI features. Wei Li of BlackRock is optimistic that AI can keep driving returns, writing, "We see AI build-out and adoption, creating opportunities across sectors. The AI theme has driven U.S. stock gains and solid corporate earnings, making us overweight U.S. stocks overall." Wei joins us now for more. Wei, it's the corporate earnings side of this that I think we should sit on just a little bit longer. Are you actually seeing this reach the bottom line? And why are you so confident it can do so in much bigger ways in quarters and years to come?
We think that there is more to go in the AI cycle, but we are lighting up on our concentrated conviction in tech and instead looking more broadly at the AI broad build-out complex and ecosystem. You look at the earnings picture, Q2 earnings, all sectors actually beat expectation. You look at the overall picture, we're talking about 13% earnings delivery versus expectation of 10% at the beginning of the quarter. And looking ahead, consensus is pointing to a lot more broad-based earnings growth picture rather than a very concentrated picture, which is what we had so far. So yes, we think that there is more to go for the AI theme, but it's not just about the initial first phase beneficiaries anymore. We're broadening out to other sectors like utilities, like materials, like energy, like healthcare, because we think that that is starting to play out on a broad-based way. So we are overweight U.S. equities as a result and less concentrated compared with how we played it up until now.
So, Wei, let's pick out a sector. You mentioned utilities. If you haven't been following this closely, and of course you have, utilities are up more than 20% on the S&P 500. That sector on the S&P has outperformed the NASDAQ 100, which might come as a shock to a lot of people, Wei. Just what is happening with utilities? Why have we seen such a large gain, and why do you think it can ultimately continue?
Two factors in particular. First is around the fact that the AI build out the CapEx spend by consensus estimate, which is wide ranging. We're talking about potentially the magnitude of CapEx spend comparable to the first industrial revolution, especially when we also throw in some of the other numbers around the low carbon transition. So certainly that has helped with sectors that are well positioned to benefit from the broader build out. And second, what's happening in the rates space, right? We have seen very meaningful repricing in rates. So for sectors that are sensitive to that, there has been corresponding relative performance as well. Right now, the Fed is expected to cut 250 basis points from now until the end of next year, which is really what you would expect from the central bank if we're talking about a deep recession or certainly recessionary environment, which is not what we're seeing coming through in terms of the economic data releases. So we certainly also think that in terms of rate repricing, maybe markets went a little too far and we would lean against that. But certainly that also explains the relative sector performance that you just talked about, Jonathan.
We'll go into that a little bit further, but I want to stay on big tech for a minute, just because we were talking to Peter Scheer earlier this morning, and he said he could see another 10% downside to the overall index driven by some of these large tech names as people reassess just how quickly some of these profitability measures are going to come to the fore. You kind of had a little bit of a change in tone, recognizing that people had really shifted away from some of these names and were questioning the speed in which it would be monetized. How are you arranging? Do you expect a similar kind of downdraft? Is that kind of how you're positioning and being a little bit more cautious right now, even if long term you're still bullish?
Yeah, I think what you just talked about is exactly why we are broadening out in terms of how we implement AI. If you just look at the big tech, if you just look at the tech sector in particular, the gap between its earnings expectation, earnings growth expectation versus the rest of the market is now narrowing. And that points to we cannot indefinitely extrapolate the sort of earnings growth that have supported the sector up until now. And certainly what you talked about in terms of greater scrutiny around the return on investment of some of the hyperscalers CapEx, that certainly also weighed on sentiment. How we look at it is not just from the individual company perspective. Yes, of course, we look at AI CapEx, we look at the return expected off the back of that CapEx, but actually in order to fairly assess what is a reasonable return, we got to look at it on a broad economy basis, because there are beneficiaries of this theme that is not concentrated within the specific tech sector, within the Magnificent Seven. We're talking about other sectors as well, different phases of AI adoption. So I think looking at it from a top-down, aggregate economic wide basis is how to properly assess the return on the enormous amount of CapEx that has happened, that is also expected to happen.
You were talking about the economy, and you mentioned how a lot of what's been going on in markets and the rotation has been tied to this, what you think is excessive pricing in how much the Fed is going to cut rates. How important is CPI to you coming out tomorrow at a time where the emphasis clearly is much more on the labor market?
I think CPI is important to the extent that right now markets are split between if we're going to get 25 basis points of cut or if we're going to get 50 basis points of cut. And CPI is the last remaining big data point from now until the Fed meeting. So it's important in that regard. But I certainly agree with your observation that market focus and frankly, Fed's narrative, the focus of the Fed has shifted from inflation fear to growth slowdown and recession fear, right? So CPI tomorrow is important, but certainly a lot more sensitivity has been baked into labor market release compared with the CPI print. Now, what is happening in the space of inflation? Inflation has come down a lot, and so far the last quarter actually is the core service piece that has really kind of surprised also to the downside, supported by slower demand, supported by slowing wage growth because of the positive supply shock from immigration. Now, in the very, very near term, all of these factors have room to play out, which is why we are also expecting a somewhat benign reading tomorrow. Now, having said that, going beyond the kind of the immediate month upcoming, we do see inflation eventually settling at a level that is higher than pre-pandemic levels because of structural constraints coming from the low carbon transition, coming from geopolitical fragmentation, coming from ultimate labor shortage from aging population. So markets are currently reacting as though we're going to have lower and friendly inflation prints, which feel about right, but it's underappreciating the level to which we're all going to have to live with structurally higher inflation because of the factors that I just talked about, not to mention greater fiscal spend, no matter who gets in the White House later, early next year.
So Wade, just quickly, before you go, are you hesitant about getting long, the long bond with all of that in mind?
We favor the belly of the curve rather than the long end of the curve for precisely that reason. Markets are currently both underappreciating inflation premium. It's not expecting inflation to be structurally higher than before. And on top of that, markets are underappreciating the greater fiscal trajectory. Right now, debt to GDP ratio in the US at 123%. It is expected to get to 150% by the end of the decade and 200% by the end of 2040. And depending on the fiscal mix of the different candidates, that can even be more pronounced, right? So when that is the case, investors ought to demand greater compensation for holding duration in portfolio, which is why we prefer the belly of the curve rather than the long end of the curve right now.
I'm told there's a bond auction as well a little bit later this afternoon. White Lee, thank you, of BlackRock. $58 billion of 3-year notes, then tomorrow $39 billion of 10-year notes.
And $22 billion of 30-year notes the day after. And
knew I forgot something.
Yeah, I mean, come on. And actually, that might be the most interesting because it's the longest, so it really will test people's appetite and sort of where the deficit falls in that.
The event of the next 48 hours. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. BMW plunging in the European trade, down nearly 7%. It cut its full-year guidance, pinning automaking operating margin between 6 and 7%. That's a downgrade from 8 to 10% previously. BMW said a faulty braking system from a supplier led to a 1.5 million vehicle recall. It also noted the ongoing slump in China as a headwind. Morgan Stanley says the euro will slide towards dollar parity within months. Strategist David Adams expects the single currency to slump by 102 by year end, roughly 7% weaker from current levels. Adams said that the market may refocus on an ECB cutting deeper and faster than what is currently priced in. His call is the most bearish call among currency strategists surveyed by us. The consensus expects the euro to strengthen and end the year at 111. A SpaceX Falcon 9 rocket launched from NASA's Kennedy Space Center in Florida earlier this morning. A crew of 4 private astronauts are on board. The mission aims to conduct the first fully commercial spacewalk. It will test spacesuit tech developed by SpaceX. The crewed capsule is intended to fly an elliptical path around Earth at a maximum distance of about 870 miles. That is the farthest distance since the Apollo program ended in 1972. And that's your brief, John.
Danny, thank you. It's pretty incredible, isn't it?
It is. I spent a lot of time focusing on this actually this morning. And
what did you learn?
The lead pilot is Jared Isaacman, who is a 41-year-old billionaire who founded his own company and dropped out of high school, who has 2 young daughters, and that he's going to have this sort of like umbilical cord attached to him with oxygen coming in as he does a spacewalk with another person. And it's just really interesting. You know what they're not doing?
What's that?
Rescuing the two people who are stuck in space.
They're set to do that in February, though, right?
I know, but they got to wait kind of a long time.
It's amazing. Amazing the developments we've seen in the last few years. Up next on this program, it's debate night in America.
Kamala Harris will deliver crime, chaos, destruction, and death if she's allowed to be the president.
He plans to create a national anti-abortion coordinator.
She's lazy. She wants to have an open border.
If you got something to say,
He gets the opportunity to do just that a little bit later. Box office in Philadelphia from New York this morning. Good morning.
could face bigger challenges next.
It was going to keep rate World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Equities on the S&P 500 just a little softer, but basically flat to unchanged throughout the morning so far. In the bond market, yields higher by 2 basis points. The 10-year 371.92. Under surveillance this morning, it's debate night in America.
If she wins, your finances and your country will never recover.
He intends to enact what in effect is a national sales tax, call it a Trump tax.
Kamala Harris will deliver crime, chaos, destruction, and death if she's allowed to be the president.
He plans to create a national anti-abortion coordinator.
She's lazy, and probably more importantly than being lazy, she wants to have an open border.
If you got something to say,
We are all looking ahead to tonight's debate between Donald Trump and Kamala Harris to gauge potential policy signals from both candidates. Tom McLaughlin of UBS writing, protectionism is once again on the ballot. The choice, sharply higher tariffs under Trump versus targeted selective tariffs under Harris. Uncertainty about the election outcome, and hence any specific trade policy remains high. Tom joins us for more. Tom, good morning to you.
Good morning.
What are you looking for from this evening?
Well, it's going to be highly contentious. That's not going to surprise anybody. What's interesting, I think, is there was some studies done about a decade ago about how people look at different debates. In primary debates, you had as many as 60% of the people who were listening to debates actually making a decision as to the candidates. But in the presidential debates, when the final two candidates are set up, the most is 10%. You don't really see much movement. And in this year, with this kind of polarized electorate, I'd be surprised if more than 5% actually are looking at this and saying, I'm going to make a choice. They're going to reconfirm a lot of their existing views.
Is it a little different given how different this election is? It was supposed to be Biden, it's now Kamala Harris, and voters are still trying to understand who she is and what she stands for.
That's right. I mean, she's been in the national spotlight to some degree for 15 years, but as a vice president, it's probably the worst job in America, right? You don't have the ability to basically make policy. So she's trying to set forth new policies under her own name and basically separate herself to some degree from what the Biden administration was doing.
But regardless,